Hello and welcome to A-Team Group's RegTech Summit Apac Virtual. We would like to thank our platinum sponsors, Solidatus and Refinitiv, our gold sponsors, Know Your Customer, IHS Markit, SIX, Smarsh, the Derivatives Service Bureau and Relativity, and our media partners. You can connect with your peers on the networking page, and if you have questions for the speakers, please use the panel to the right of the video. Thank you for joining us today, and I hope you enjoy the summit.
Hello and welcome. My name is Andrew Delaney and I'll be hosting today's session. I'm Chief Content Officer at A-Team Group, organisers of today's RegTech Summit Apac Virtual. Following the success of our various RegTech summits in London and New York, and over the past couple of years, our virtual series, we at A-Team are delighted to introduce our brand new RegTech Summit for APAC. This is a virtual version. It was meant to be in person and that didn't happen this year. And we are hoping very much to be there in person in Singapore next year. Let's talk a little bit about today's event. We're going to be exploring the current regulatory environment in the Asia Pacific region, be looking at the impact of COVID on the RegTech segment and the extent to which the pandemic has acted as a catalyst for RegTech adoption in financial markets. Today's live stream is made of keynotes, fireside chats and panel discussions featuring industry experts who are working with and leading RegTech projects and implementations. I would like to take this opportunity personally to thank our speakers and of course our sponsors for their support, expertise and insight, and for their generosity in taking the time to join us today. Before we get going with the main program, a few housekeeping points from me. Let's see, we'd like you to visit the networking and sponsor section if you can. This will allow you to connect with sponsors and find out how they can help you. I'd like to remind you that it's their support that makes these events possible. So please do connect with them if you can, as this will make them more likely to support future events and allow us to bring us even more valuable content. I think you'll see we've got a great program lined up for you today. Through the networking section of our platform, you can also see who else is attending, and you can network with peers and colleagues. So give that a whirl. We also ask you to get involved. You can do that by voting in audience polls and by asking questions of our panelists and speakers. For doing that, we use the Slido facility, which you'll see to the right of this video as you look at me. The code for today's event is hashtag RTS APAC. And finally, I wanted to just update you on A-Team's RegTech related activities. Hot off the press for this event is the fact that we have our new 2021 edition of the popular Reg Data Handbook available as a download from this platform. That's free of charge. So go ahead and download that when you get a free moment. And also, I'd like to encourage you to sign up for our RegTech Insight publication. It's a weekly email which brings you straight to our RegTech channel on our website. Great source of news and commentary on all things RegTech. Again, you can sign up at no cost. So do make sure you take advantage of this free source of insight. Okay. Let's get back to today's session. Before we get to the main program, we're going to hear a message from our platinum sponsor, Refinitiv. So let's hear from Refinitiv now. Great, it's good to hear from Refinitiv and indeed to have all of our sponsors on board. They've been very supportive and encouraging in our efforts to bring you this content for the APAC region. So long may that continue. So we're going to sort of launch the main program now, and we're going to start hearing from Damien Pang, initially from the Monetary Authority of Singapore, who will be giving our introductory keynote presentation. Damien is Deputy Chief FinTech Officer and Executive Director for Data and Technology Architecture at MAS, and concurrently heads the FinTech Ecosystem Office there. The Data and Technology Architecture Department develops enterprise architecture and platforms for data flows and collaboration, as well as providing engineering technology support for MAS's digital transformation. And this FinTech Ecosystem Office is responsible for FinTech ecosystem development, including international collaborations, as well as skills development. So with that in mind, I'm going to hand over to Damien.
Good afternoon, everyone. Where is the knowledge we have lost in information? T.S. Eliot's words from 1934 continue to ring true in the current age of innovation and big data. We are collecting much more data, the foundation of any decision making, because of improving technologies, changing business needs to satisfy regulatory requirements and to enhance risk management capabilities in our institutions. We have spent over a decade plugging the fault lines that resulted in the worst financial crisis. The financial system today is safer, simpler, and fairer. But are we truly becoming more knowledgeable to new and emerging risks? We have made great leaps in the policy and risk fronts, but we have not paid as much attention to the plumbing in this information age, the infrastructure and enablers that allow us to function efficiently and identify new fault lines that we may need to plug. For instance, many firms still have in place proprietary IT systems that are more than a decade old. These systems do not communicate well with other systems, neither are they designed for the age of big data, AI, and cloud computing. The limitations of these systems are now apparent and hindering progress in adopting innovative solutions in all domains. The pandemic has also brought existing and new shortcomings to the forefront. Let me pivot to two specific domains: risk management and regulatory compliance. Regulatory technology, or RegTech in short, has entered into the financial industry's lexicon in recent years. RegTech is generally defined as the use of technology to enhance risk management, compliance, and regulatory reporting by financial institutions. MAS is a strong advocate when it comes to the use of technology in financial firms. In April this year, we launched the RegTech grant, a $12 million grant to support financial institutions to develop capabilities towards risk management or regulatory compliance. The reasons were obvious and remain so. Depending solely on manual processes, siloed teams, and outdated systems would be detriment to the institution in the medium to long term. In the first 6 months of the grant, we have allocated close to 10% of the amount to relevant big tech projects. Administering the grant has given us significant insights into the use of RegTech in the industry, and we continue to learn. Based on these insights, allow me to share 4 perspectives on how we can embrace technology and innovation in compliance and risk management, targeted at RegTech firms, but with equally important lessons for institutions. The first perspective, embrace limitations. During the development and testing phase of a product, many assumptions are often made. There's nothing inherently wrong with these assumptions. The problem arises when these assumptions get hardwired into the DNA of the product. This means that the product is unable to function should these assumptions not manifest in real life. And the likelihood of this happening is much higher than either reported or spoken about. Take the foundation of any tool, data. Often, much assumptions are made about data availability, data structures, data stores, etc. The reality is that financial institutions are only starting to develop and implement their data strategies. This comes with real implications because much time will be spent dealing with legacy systems, API-less data sets, old data file structures. Many tools either fail or only achieve limited success at best in these environments if they cannot adapt to these limitations. The key lesson here, don't relegate limitations to an afterthought. Consider these limitations early in the product lifecycle. And this segues to my second perspective, the absolute need to support customization. In the regulatory sphere, there must be an absolute expectation that the laws, rules, and guidance from regulators are customized to each jurisdiction's requirements. So while the foundation may be Basel principles, CPMI or school standards, FSB guidance, IMF requirements, or FATF rules, as product developers, you will quickly learn that each jurisdiction charts its own path, building on these baselines and deviating significantly when it must. And this is where most RegTech products suffer significantly. The development sprints of the tool are often designed to operate in a one-size-fits-all environment, hardly a replication of the real, complex world. I cannot stress this point enough, given the feedback we hear from the industry. Products languish in pilots, or products are unfairly criticized, or in extreme cases, products are given cursory considerations and dismissed almost immediately because they lack the ability to fit the market for which they are supposed to be deployed in. And this brings me to the third perspective. Complexity is your biggest enemy. Let me preface this perspective with an example. There was a tool that I've come across that pride itself in the level of sophistication that I have not seen, such that it did not seem to be grounded in rules or known AI algorithms. Instead, all that was needed was for a large amount of data to be fed into the product, for it to self-learn the heuristics of the data set. Now, when the training was completed, it was able to proceed to detect anomalous data points. It was a fascinating demonstration of the technological capabilities and reflected an absolute mastery of complex mathematical techniques. However, this tool did not do too well when tested in various RegTech use cases, including transaction monitoring and credit scoring. Simply put, it was too complex for it to inspire confidence. A money laundering review officer is unable to ascertain the reasons why the tool has flagged a transaction if no other information is present. Similarly, a staff will likely remain unconvinced that a recipient is a poor candidate for a loan without any additional information beyond a simple red flag. This example is just one of the many that we have heard about, tools that are presented with such complex features that firms are reluctant to consider them for everyday use. We must remember that regulation today is significantly rule-based. Hence, a tool that can significantly or efficiently synthesize the rules and establish the requisite outcomes will likely be held in higher regard than one that spit out red flags with nothing more. Now, this is not to say that products should not bear features of machine learning or artificial intelligence. However, if this is the sole characteristic that defines your product, it will likely not generate the buzz that you had envisaged to replace existing methods. In short, make sure your product is a solution to today's working style, as well as the challenges of tomorrow. And most importantly, keep it simple. Finally, on the final perspective, don't leave out the experts. Let me elaborate using a parallel example. In a recent article in the MIT Technology Review, the headline reads, "Pandemic Tech Left Out Public Health Experts." Here's why that needs to change. The article speaks about how various sophisticated technological tools were developed to alert individuals about potential exposures. However, much of this development work was devoid of inputs from the very individuals whose inputs are sorely needed, healthcare professionals. Consequently, these tools were riddled with complaints and struggled with poor interest. Shifting gears back to RegTech, the same advice remains sage, but sometimes forgotten. We focus so much on the marvels of technology and its potential, forgetting that it is but a means to achieve something much more foundational, in this case, regulatory compliance. To succeed in the RegTech space, you need deep domain expertise. The individuals using your product are not going to be technologists. Instead, they are going to possess deep domain knowledge and will evaluate your product on those terms. In closing, I hope my sharing of these 4 perspectives can spur solution providers and financial institutions to better work together and support the adoption of useful technologies and innovation. The future of compliance and risk management is data-driven. In fact, this future is already here, just not even. T.S. Eliot has been prescient of the information age. But the industry's ability to fully harness the immense data lies in its ability to embrace technology and innovation to transform these data into knowledge and ultimately wisdom. Of equal interest are the RegTech solution providers playing its part in helping the financial institutions to be able to embrace technology and innovation. I look forward to the close cooperation between financial institutions and solution providers with better understanding of pain points and needs. And I wish everyone a fruitful conference ahead. Thank you.
Thanks to Damien for those opening remarks. Some sage advice there. I made a note to keep it simple and to keep it real. I don't think you can say fairer than that. So thanks, Damien, for those thoughts. Next up is our first panel, Apac Compliance Perspectives, the Outlook for Regulatory Compliance and RegTech in a Post-COVID World. For this session, I'll be handing over moderating duties to Mona Zoet, founder and CEO of RegPac Revolution, an ecosystem builder, educator, and business accelerator in the RegTech space. Mona is something of a pioneer in Asia with over 20 years experience in financial services within the legal, risk and compliance areas, specializing in AML and KYC at some of the region's biggest banks. She is a member of the SFA RegTech subcommittee and co-author of the RegTech Black Book and its sequel, which highlights all of the latest developments in RegTech, FinTech, and Wealth Tech from different angles. So I'm going to hand over to you now, Mona. Thank you for joining us.
Thank you very much, Simon. Great to be here, guys. And I assume you have a great lunch before we started. So everybody is rested and well. This is the panel about the outlook in Apac. And we have a great lineup of Debra, of Brian, of Sue, and of course, Jamal. It's a nice mix of the financial institutions and RegTech committee, as well as Capital Market Institute. And I think we can have a very great discussion. Of course, everybody knows impacts about COVID, and I don't think anybody saw it coming. And I really looked it up actually the other day, like, what is the impact in the sense of death? Because when you're based in Singapore, we have this whole discussion going on the whole time. Well, in Southeast Asia, we are almost 300K deaths. And if you compare it with the world, it's almost more than 5 million. So it is a huge impact. But then the question is it only bad, or has COVID done also something which is, maybe a little bit positive, or created opportunities that we can chip into? And I think that is a little bit what the panel here is all about. But before we go into that discussion, I really would like to have the panelists a short and sweet introduction about themselves, because it doesn't make sense for me to do that. So I start with you, Sue. Can you please introduce yourself quickly? And also maybe you can explain a little bit about what you think about pre-COVID and now. I wouldn't even say past COVID, but pre-COVID and now, about, the RegTech development, just in a few words.
Thanks, Mona. My name is Sue Cham, and I'm Credit Suisse's head of regulatory affairs for Asia Pacific. So I cover the whole Asia Pacific, and I deal with regulators. In terms of RegTech, I think before COVID, we were all, going to RegTech in a big way already in Asia Pacific. But I think it's got accelerated because of COVID. There is a lot more, use of technology. More people are going, doing internet banking than fronting up, at the bank branches. And I think, that's been a big change for us also as staff in the bank, work from home because of COVID. So the technology has held up really well. And regulators are, getting more used to not having face-to-face meetings. And so we're doing a lot of that discussions about regulation, on the internet. Thank you.
Cool. Debra, same question for you, but of course from a different angle.
Thanks, Mona. So I'm Debra Young, the CEO of the RegTech Association. We were established in Australia in 2017 as a non-profit industry association to help the ecosystem of regulators, government, institutions, and RegTech vendors to be able to collaborate and see the opportunity of RegTech more effectively. And I think I would agree with Sue's summation there very much. This, we have seen COVID actually drive forward the sheer volume of data that is now flowing around the system. And if I even look at my own online shopping habits, which seem to have gone up exponentially since the pandemic, that's a pretty good indicator. But the other thing I would say is that in 2019, my organisation had 1,000 people attend our events in that 12-month period. And since the pandemic began last year, we've had nearly 10,000 people from 70 countries attend or participate in our programs. That just gives you some idea of the fact that COVID has actually removed some of the global borders that have previously existed. It's allowed us to digitally, beam into everybody's homes. It's allowed us to have a much more authentic conversation with people than we otherwise might have had if we'd met them in a boardroom somewhere. So I think that COVID has actually been a little bit of wind beneath the wings for RegTech across the board, and the benefits are showing in RegTech themselves, but also in the institutions, and hopefully good results on the regulator side as well. Thanks.
Cool. Brian?
Oh, hi. Thanks so much, Mona. So in my prior life, I used to be at Credit Suisse. Before Sue had joined, I was a lawyer there covering the Asia Pacific region, ex-Australia and Japan. And then since then had left into startup land and in fintech. So these days I have a few different hats. So besides ACMI, we work, I was the co-chair of the RegTech Committee, the FinTech Association, but now have been kicked upstairs to the board. I also lead Light Lam, which is Law, Innovation, Technology, and Entrepreneurship at Hong Kong U, hence the signage. So really quite a few different hats in the RegTech space. And so great to see lots of old friends here and new ones as well. In relation to your question, I'm a little bit more sanguine, and I describe it as a tale of two cities. So during COVID, there were some RegTechs, if you were in communications, if you were in e-signatures, if you were in onboarding, you were doing really well, right? But then a lot of the other projects, were actually pushed aside. They were actually slowed down because people were trying to, into business continuity mode, and then those are just lower priority. I think fast forward, yes, I think those are now coming up. I think it has less to do with COVID. It has more to do with regulatory push. And I just came from FinTech Week that's ongoing here in Hong Kong, and as much as I totally agree with what Debra said, we can now scale online. We were so happy to see each other. We've got a hybrid model, right? I haven't seen some of these people in nearly 2 years, face to face, right? And I've met some people only online. I joke, I only know you with this size in Zoom. Now, this is your real size, right? So notwithstanding the wonderful aspects of online, the physical and face-to-face can't replace. I'd love to share more about that too.
Cool. Jamal.
Okay, thank you, and great to be here. So thank you very much for the invite. So a little bit about me. So I'm the Chief Compliance Officer for Hsbc in Singapore. I'm responsible for compliance coverage across all the many lines of businesses that Hsbc has in Singapore. I have the pleasure of leading 90 wonderful colleagues across all aspects of compliance, from financial crime, advisory, investigations, and on the regulatory conduct side as well. Now, in terms of COVID, and just a couple of thoughts from me about COVID. Well, look, I mean, I've seen both sides of things, from the innovation side and acceleration of technology, because many banks, particularly when it's come down to client engagement, client onboarding, and whilst some of those activities or initiatives were in the pipeline somewhere, COVID has led to an acceleration of that, right? So all of a sudden, budgets were certainly found, and technology was suddenly accelerated for implementation just to enable business to continue. So from a positive standpoint, I've seen a huge push and acceleration. I think something to sort of just call out, and many of the sort of participants here would also be aware that since the onset of COVID, we've had other risks transpire, right? So some more material and aggressive risk, particularly when it comes to cyber fraud. So we've seen the sort of comments around removal of borders, and unfortunately that's the same with cybercrime. We've seen quite a lot of that happen in Asia Pacific in certain markets, particularly in cyber fraud, and many markets have experienced that as an increase. So something that obviously financial institutions and various industry bodies and working groups are tuned in to see how we can address and mitigate that. But something just to sort of call out there from a risk component side of things, if I may.
Yeah, and that's very interesting that you mentioned that, because that is leading exactly to the next question I have for you guys. Because we are here in a group of financial institution chief compliance officers, risk managers, and institutes that really look at capital markets. But at the end of the day, it's all about risk management, right? And the question is a little bit, because of COVID, I did already hear a little bit like, what are the risks within the financial services world, and then of course in the banking world, that that you see either accelerate or actually diminish because of this whole situation of COVID, and what are the regulatory compliant issues, challenges that you see happening at this point in time as well? And Sue, I really want to start with you, because I think you have great insights in that from a Credit Suisse perspective, and probably Brian as well as an ex. But I'll start with you.
Thank you very much, Mona. Yes, I think there are a lot of challenges. I think the most outstanding one is really the fact about supervision of staff, right? So the regulators are really worried when COVID started and people, staff from banks were working at home, right? One regulator told me, Sue, I'm really worried. What if your staff said, he's working from home, but actually his little flat in Hong Kong is too small and very noisy, and so he goes and work in Starbucks. So I mean, that was worrying because we bankers handle so much confidential client information, and there was a big worry. There was a really big worry from the regulators. Obviously, regulators were also concerned about how we protect staff in terms of health, right? So we had the scare where one of our staff members went to a gym in Saigon and caught COVID, right? So they wanted to close down the whole bank. So we had to negotiate with the government saying, look, we are on 10 floors. I mean, that colleague only worked in one floor. So health was really important too, about, keeping our staff safe, if they're working from home, and also mental health. So that's the other thing, because as Brian said, it's so good to see people in person, and it's really lonely and difficult to work for a number of staff when they are alone and trying to do things themselves, and it has been a big issue. So we've been doing quite a lot of proactive mental first aid training to get our staff understand the issues and use use all the support we give, that sort of thing. Thanks, Mona.
Cool. And Deborah, I mean, you see it more from an association perspective, and you probably see a lot of different companies doing different things. Can you please provide your opinion about that?
So I think the new risks are definitely around people, as Sue was just saying, and I think it's really interesting what's going to happen over the next little while. Is that we're kind of in this uncomfortable dance right now at the moment where everybody doesn't know whether they're allowed to ask whether you've been vaccinated, or that is a forbidden question. So there's that bit of an uncomfortable dance that's happening. And then from, our organization's perspective, where we thrive on running large scale events with lots of people, what does that actually mean for us? And what's our liability around all that? Because number one, we want to keep people safe. But isn't it interesting how everybody went home when they were asked to go home, and now everybody's being asked to come back? And then some people are saying, well, I'm not sure that I want to come back. So one of the things that I think is really interesting is the power shifting away from the boss telling you what you can do. We've enjoyed this flexibility in our work lives over the last couple of years, and has the power shifted a little bit to the employee saying, well, actually, I want to maintain that flexibility. I've enjoyed that. I've enjoyed being with my family, and sure, I'll come back to the office, but I don't want to come back to the office full time. So I think that there's going to be a whole raft of issues, and they're centered around people risk. Oh, the other thing that is definitely happening, because in Australia we've had our borders shut, talent. You can't. There are no students. There are no more lower paid workers coming in that would typically come in and do some of the jobs like making the coffee and things like that. So, and there's a lot of poaching going on right now as well. So the people that are paying the highest dollar will get the best people. So there's a lot to be said around people risk right now.
Yeah, and you mentioned quite a few interesting stuff, and I really would like to hear the opinion of Jamal now, because you're based in Singapore, like me, and Sue as well. So because we're talking about hybrid, we're talking about going back to work, seeing people again. But let's face it, in Singapore we're still a little bit tricky there. So please provide your opinion.
Thanks, Mona. I think continuing on from the people theme, because I have seen things come across various different aspects in the risk spectrum. But looking at the people theme, I think one thing to call out is really the potential dilution of culture. And the reason why I'm saying that is because, despite the working from home environment that COVID unfortunately has instigated, we have continued to recruit, and we have, I'm talking about we in the collective sense of financial institutions, jobs continue to be advertised, people continue to apply for them and are successful as applications. But immersing an individual into the organizational culture and doing that remotely without the face-to-face interaction across various different, teams and various different hierarchies of management, I think becomes a little bit more difficult. So to me, it's really around some of those aspects on the people side of things where we're just not able to really kind of impose or immerse someone into the culture of the organization and how things are done within a particular organization, because for a large part of the time, individuals are, working from their homes from a laptop and not necessarily seeing the benefits of engaging with their superiors, their peers on a day-to-day basis. And I think that does have an impact. And in terms of some of the risks there, I mean, one of the things, a couple of things that we've been sort of monitoring, and the MES has been particularly focused on these things, is really how, particularly with the onset of COVID, given that we had to make some changes to the working environment and individuals' locations, it was a case of, well, what processes and controls are going to be impacted by that? So anything around segregation of duties, anything around system enforced segregation of duties, high risk processes, etc. And there were certain activities that, we just couldn't do within the timeframes that we'd like, because there's some dependencies on customers providing information, being able to contact them for RFIs, etc. That had taken longer. So one of the focal areas from the MES, aside from the people side of things, was really around how banks are managing risks in this interim period, what kind of risk assessments are being done to processes that have been impacted because of the working arrangements, and how are those being mitigated and monitored. So to me, we're certainly on the receiving end of seeing a lot of that focus. And also, we'd had, the pleasure of seeing some feedback and guidance from the MES in terms of pulling together best practices from banks so that folks can actually learn from themselves in terms of what was happening. So quite a few things on both the people and the risk management side that I just wanted to call out.
Cool. Anything to add, Brian?
Maybe just briefly, because a lot of great stuff has already been covered. So staying on the people theme, one thing I was recently interviewed by one of the governmental kind of research organizations, and the phrase I used, I don't know whether politically correctly or not. I said, look, we had a global crisis, and frankly, I think the regulators kind of closed one eye on various things, right? Because we had to deal with a lot of stuff. So I come from capital markets. If you go to the trading floor, there's surveillance galore, right? You're not allowed to bring your cell phone in. You're not allowed to do all this stuff, right? Suddenly people are at home and they're doing what? And they're using the home Wi-Fi, right? So surely there are things that are not quite the same standard as they were before the crisis, right? And I think the regulators understand that. But so this gives rise to a few different things. So one is, we all thought that we didn't know how long this would last, and it's still going. Okay, so all our prior business continuity plans for what, 1-2 months? This is a new world, right? So we're now having to deal with that, and I think the regulators understand it, but so the compliance officers and risk officers are rolling up their sleeves and trying to address that amongst various things. So secondly, it was interesting today. I bumped into a couple of friends at banks, but also in fintechs, and they said, I'm starting to travel again. I have not met whole teams that I've hired in the last year or so. I've never met them before. So imagine running an organization, right? And Jamil, that was a really great point, right? How do you build the culture of risk? Because a lot of organizations in different departments, it's about assessing the risk and risk appetite, right? If you haven't met people, you don't know what their real risk appetite is. How do you build that? So I think that's really an important one. So the last but not least, I think in relation to people, so there's the people aspect. So increasingly, you try to use technology to address some of that, right? But technology, again, as we all know, is great, but not a panacea, because by the same token, then you increase the risk in relation to cybersecurity aspects, right? So, and data leakages and now this is where it gets complicated. We're now during this period, at the same time, we have new data regulations coming out across the board in so many different jurisdictions. So in data, I classify it as 3 categories. One is security, the second is privacy, and the third is cross-border. And now we're being hit by all of that. So notwithstanding actually having more information, more data, and more technology, which is great and addresses some of these issues, we have more regulation to deal with across different jurisdictions to address as well.
And that leads very nicely to the next question, of course, because we say, in a way, COVID have accelerated the adoption of RegTech or technology in the regulatory space. It has quite a few benefits in a certain way of working remotely, what nobody would have done before. But of course, you can also argue there is probably still a lot that needs to be done as well to overcome challenges, right, in this space as well, from a risk management perspective, from a people perspective, etc. So let's talk a little bit about those challenges. And I think we have a poll question for that. But before we get the audience to vote, it is more about, what are the biggest challenges to adopt regulatory technology for the financial world, for the financial institutions. And that can be of legacy systems, the mindset culture, challenges, vendor risk management, improvement of solutions, and the return of your investment, unproven unproven solutions and the return on investment, and too many point solutions. So, you don't have an end-to-end solution, but you have a lot of solutions that all make one solution. So before we go to what the audiences are voting, I just would like to have your opinion. What do you think is one of the biggest challenges that we're facing, although there is an acceleration in RegTech within this COVID period? Debra, what do you think?
So I think the greatest institutional barrier, twofold, is the first is internal alignment and agreement on what are the actual problems to be solved, and actually it's alignment. So that might mean compliance, risk, legal. It could mean procurement, and I'll get on to procurement. It could be innovation, it can be IT security. So there are many, many, many stakeholders across large institutions that need to be engaged and 100% aligned before you can really consider a RegTech solution. And on the point of procurement, one of the things that an association will do is help take some of the sting out of that tail, because when we're talking about proven solutions, I would say 99% of the people in our community all have customers right now. So their use cases already out there. You can access their case studies. You can see who they're working with. But procurement actually slows things down for both sides. So for the innovation teams in the institutions who are very hungry to bring in the latest technologies to actually help with that efficiency and productivity and transparency and safety, they're being slowed down by procurement, so they can't get the technologies in quickly enough. And of course, for most scale-up RegTechs that I know, and most of our RegTech members would be scale-ups, procurement is the number one killer of their energy and their time and their venture capitalists' money.
Yeah.
So I'll just probably leave it at that to say we have still not solved the procurement issue. Everybody talks about it, and we still haven't moved the dial. So I would love to make that call out. If anybody would like to try and bust procurement with me, I'd be a happy and willing participant in that project.
We have two financial institution professionals that can definitely shed some light on that. So Sue and Jamel, please go ahead. Sue, please, first.
Hi, thank you. I don't know much about procurement, but I do know that it takes a lot of time. I used to work in Hsbc, so the procurement process there is very thorough one. It takes a lot of time. What's more important is alignment. And I think, different financial institutions, have different needs and as to where they are when thinking about RegTech investment, right? So it's huge difference, with different financial institutions. So for those, who have long history, for example, Credit Suisse, we've been around over 100 years. The challenges here is quite different from a startup. right? So the legacy systems here, you know, would be more of an issue than for a startup, for example. And I also think that mindset is really important too, you know, in adoption of RegTech. So sometimes you have the technology ready, you know, and it's all available, but you know, certain people they switch it off, they don't use it. So you can have all the best technology that's there, but you know, so what if the team member is one who decides that that's just a pain and it's getting into the way of me, you know, making this deal, so they switch it off, and that happens, right? So you know, that sort of thing that Jamal talked about, you know, making sure that you get your people on board with the right risk mentality. That's crucial, you know, that's the DNA, that's the culture that you want in people thinking about risk appropriately, and not say, you know, I'm going to not use this technology because it's going to get in the way of, you know, me doing this deal.
Yeah.
Thank you.
So we heard about procurement, we heard about legacy systems and mindset and culture. Can you add to that, Jamal?
Yeah, just one thing to call it, which is the scale and effort that sometimes goes into transformation and change, because within HSBC, we do have many programs across various different aspects of compliance around innovation. And there's obviously a prioritization needs to take place. So which markets, we're around in around 20 markets in Asia Pacific, which market goes first, and then just the scale of effort to project manage and ensure that all the necessary approvals have been sought and in place, and that includes regulatory outreach that has taken place in each of those markets. So and I think that is a consumer of time, effort, and also budget. So when you're looking at in terms of budget allocations for these implementations, there's obviously the tech development piece, which is a core, because that's really going to be the one that's driving the significant change to processes. But then there's a whole component around transformation, actually making that change happen. And that is a very, very complex activity, that whole prioritization, budgeting, and ensuring that we've got the right transformational people, project managers, etc., to make this happen is very, very, it can be very time consuming. So just another, I guess, obstacle that multinational banks have to kind of work through and do work through to get these things done, but it is quite challenging.
Anything to add, Brian?
Again, very briefly, I put in my money on mindsets and skill sets, right? Okay. Because having worked in the big bank, for those who haven't, you've heard all the different departments, right? And every single department needs to be cajoled to actually, you know, agree to a new technology going to be used by a back office. Thank you very much. It's not even front office pushing for it, right? It's back office. So therefore, that's why I think it's so important, not just skill sets, but as Sue said, mindsets. People who are in banks and in legal and compliance generally and risk are not known to have the most innovative mindsets often, right? That's not they just look for risk, right? They identify skills. So there's the shift required there, but it's a balance for us because there's a responsibility. You know, we are a trusted, regulated institution. So I think that would be what I would put the biggest challenge to be, and we can talk about trying to address that too. Right.
Cool. Do we have any outcome of the poll? Because I haven't seen it. Okay, let's have a look. What do you consider the biggest challenge barrier for adopting RegTech? Well, of course, we already talked about it. So 33% thinks mindset and cultural challenges. I definitely think that's a big thing too. And then legacy systems, we talked about that too. So I think we're relatively aligned with the priorities, right? What the biggest challenges are. Too many point solutions is the third one. I definitely agree with that too as well, because as a financial institution, you're not going to buy like 5 or 6 different RegTech solutions to solve all your problems. So I definitely think that's the good one. But I'm actually a little bit surprised that vendor risk is relatively downwards? Because from my experience talking to financial institutions and banks and bigger fintechs, is that that the trust factor is also relatively big in trying to partner up with scale-ups or startups because they don't have a big track record yet. So I would have thought that would be a little bit more up. But anyway, great. Let's get back to our next question. Sorry, let's go to the questions. I have a couple of questions from the audience, which is great. And so one of it is the pandemic has seen a lot of firms pushing to implement RegTech solutions more quickly than normal. Is this increase in adoption sustainable? Will the adoption of RegTech solutions slow down in the next year or so? Deborah, what is your opinion of that?
It's a very good question.
Yeah.
I do actually think, to some earlier points that were made about a lot of point solutions, I think we may start to see some aggregation of some of those solutions. I think that we may see some mergers and acquisitions and things like that taking place. In fact, we are already seeing some of that activity taking place. And so there could be, a couple of smaller players coming together under a new umbrella altogether. So we're already starting to see some signs about the maintaining momentum. I think that in all markets at some point there will come a point for consolidation, and so it's probably going to come through aggregation through APIs potentially, and or that we see more mergers and acquisitions and some of the larger players acquiring some of the smaller players. And we may see it play out a little bit more like that. That being said, my final point, though, is that at our association, we take a very broad view of RegTech, that it's not just financial services. So I think we've only just begun to, on the tip of the iceberg there in terms of what other things RegTech could solve for. So I think that we could pretty happily keep going forever on all the other regulated industries that exist that have regulation and compliance challenges.
Cool. And in the interest of time, I fully agree with that. But I really, based upon what you just told me, the other question is more about, like you're saying, it's just the tip of the iceberg, because we talk a lot about adoption, or actually solutions in the RegTech space is all about KYC and AML, because it is a must to have. Regulators are on top of it, and transaction monitoring as well. So do we really? The question is, most of RegTech has been anchored on anti-money laundering, KYC solutions, and transaction monitoring, but RegTech is beyond these. Where do you see the most opportunities for RegTech? And I think that is interesting to have a little bit of a broader perspective there as well. Brian, can you maybe have your view on that? Because I think
Sure.
You have a nice background as well for that.
Sure. So just to quickly add on to Deborah's earlier point, though, I mean, I totally agree with what Debra said. I mean, I think we here in Hong Kong are actually lucky because we actually have the regulator really focused on RegTech here now. So it's not COVID, it's the momentum, is the regulators really pushing, and we're working closely with the regulator in our industry capacity building hat to grow that across the board. So that's the good news. Now, in relation to the growth area, funnily enough, yesterday we just launched a new white paper, and that's on applying RegTech to green finance. So really, if you think about, we're at COP26 right now, focus on climate, both on the buy side in relation to funds, but also in terms of the banks and their lending, and also the capital markets. There's a lot of interest in terms of using technology to address greenwashing. So IOSCO recently issued some papers in relation to recommendations. So RegTech can, and as more countries have more commitments in relation to complying with climate commitments, that's another wonderful angle, and linked to what Debra said, it's a broader definition of RegTech, but using technology to address climate concerns that addresses so many parts of finance, as I said, funds, lending, capital markets, and new asset classes too, including carbon credits and tokens.
Yeah, cool. And that leads me to the next question as well is, how do we see RegTech evolving in APAC in the next 12 months? Because, we are looking at broader, but also from a financial institution perspective, how do we see this evolving because of COVID, because of the acceleration of digitalization, because remote working? What do we see? Jamal?
So I think, thank you. I mean, some very good points made previously. I mean, I think from my perspective, two things I would like to call out. The first is really around fraud and cyber fraud. So I do think there'll be some further developments and more future investments into this space to actually identify and look at some of the existing technologies that are there in terms of some of the biomechanical, biometric data, as well as looking at some of the behavioral analytics that go into some of these applications. So for me, because fraud is becoming such a sensitive issue, given the scale of fraud, I think banks are being encouraged by regulators to do more to protect consumers. Many banks have actually been doing quite a lot of this already, but it's quite clear that they need to be some more enhancements, and particularly around the technology side of things. So I see that one area as a continuation. The second area that I would see is particularly around on the surveillance side of things. And the reason why I say that is because we've talked about insider risk or potential insider risk. Brian's mentioned about some of the activity that we typically would expect to be conducted on various different recorded lines, et cetera, for surveillance. So I think another opportunity for me is where we might see some of this is on the surveillance side of things, where natural language processing techniques can be used to actually detect some particular red flags in communications, given that surveillance is quite a mammoth activity given the various different modes of communication that may exist. So two areas for me, I think we'd see some developments across APAC.
Cool. Sue, what's your point of view?
Yes, I think regulators will focus on what's happening in the cryptocurrency space, virtual assets. I think a lot of APAC regulators are working on making sure that they use RegTech to cover this area of having exchanges, crypto exchanges and things like that. Otherwise, there's going to be a lot more consumer complaints about being cheated and that sort of thing.
Cool. Okay, guys. I think we only have 2 minutes left, so I just want to wrap it up a little bit. First of all, I will really thank you all for participating. But I want to have one last sentence of you. What do you think that would bring a really RegTech adoption as a whole in APAC? What do you think that would be the ingredients that we need from an ecosystem? So not only from a regulator, because I hear a lot about regulators, but from an ecosystem. What do we need in APAC to bring the RegTech adoption as a real kind of value add for financial institutions and maybe even beyond? Start with you, Brian.
So I'll come back to my earlier theme, mindsets and skill sets, right? So we're fortunate enough that the HK, so we've gone past the first stage of RegTech awareness. Now it's about adoption. And the MA has just issued a RegTech skills framework. So the idea here is how do we, based on all the things that you've heard about how complicated it is to sell within the bank, how do you get people within the bank to get within that mindset and skill set? So I think that's really the next, and then it helps that I'm now at a university, so I'm really focused on pedagogies and the like. We've used experiential learning to kind of teach, I teach experiential and interdisciplinary. So I have law students together with business students, together with computer science students. How do we train them to learn about each other's languages and do things? So I think that's really the next challenge and next step forward to real adoption.
Great. Sue?
it's the ecosystem. I think it's a collaborative ecosystem, as Brian said, as all of you said, to get everyone on board in this area, then, RegTech can proceed forward.
Cool. Jamal?
I think it's about how governments, including regulators, can incentivize and spur innovation. So Singapore, for example, we've got some very good financial incentives and schemes and grants being offered by the MES with the intended objective to encourage innovation. So I think more of that across Asia Pacific will certainly, I think from my perspective, facilitate a greater push, particularly in the RegTech space.
And last but not least, of course, Debra.
Thanks, Mona. I couldn't agree more. Government is really critical in this, and that meaning government separate from regulators, really critical that governments understand the power of RegTech. And one final point is that if FinTech is the pipe, then RegTech is the safety valve and the washers and the tap to make sure good stuff comes out. And so I want to see that RegTech can live as a great enabler of FinTech and many other things. That's all from me.
Great, and I think that's a really nice end to this fantastic panel. Thank you very much, and Andrew, back to you.
Thank you. Thanks, everybody. Thanks, Mona. Great job there. I thought it was a great session. Really good, comprehensive view of the sort of compelling issues. I should tell the audience that Debra and Brian have been kind enough to share some of their market research with us. We're posting that on the resources area of the platform. So please do go ahead and take a look at those. You can download those when they're up. I will be taking a look myself and look forward to reading those. Another comment on the session. We do a lot of market research ourselves, and I'm working on a project at the moment. I spent quite a lot of time yesterday talking to a consultant around adoption of RegTech and new technologies through this pandemic period. And I think that the question from the audience about sustainability of the increased pressure on people to put new systems in is real. People seem to be playing somewhat of a catch-up game after last year's shock, when perhaps people were looking at comms and ways to work at home. We've got to get on with some real work now. So I do think the resource issues, I think Debra highlighted, are going to come into play, and let's hope things start to get a bit back to normal so we can get on with our jobs. So anyway, that's enough from me. So once again, thank you to all our panelists. Great session. Look forward to seeing you all in person next year. Next up, we're gonna move on now to a fireside chat session. It's going to be run by my colleague at A-Team, Sarah Underwood. She'll be leading the fireside chat with Jacob Goethals of SIX, who will be talking about best approaches for managing compliance in a multi-jurisdictional marketplace. Over to you, Sarah.
Thank you, Andrew, and what a great start. Fantastic panel. As Andrew says, it's my pleasure to host a fireside chat with Jacob Goethals, covering how to keep up with the evolving Apac regulatory landscape, cost-effective approaches to managing compliance in a multi-jurisdictional marketplace. Phew, that's quite a lot. But anyway, let me tell you a little bit about Jacob. Jacob is Senior Content Manager for Legal and Compliance Data at SIX in the financial information business. In this role, he's responsible for the analysis and implementation of data and products in these areas of tax, regulation, and compliance. Before joining the company in 2011, Jacob headed the compliance department and acted as compliance manager at various international banks at Switzerland. So thank you for joining us, Jacob, and thank you for bringing your great experience to our conversation today. So let's get started. And setting the scene, how is the Apac regulatory landscape evolving?
Hi, good morning to all from Zurich. Good afternoon to everybody. It's my pleasure being on the call, and It's a very good question. So although I'm sitting in Zurich, but I'm monitoring regulatory developments worldwide, not only in Switzerland, not only in Europe, but also in Apac, as well as in Northern America. And what I see in the recent few years, it's really the regulators worldwide are dealing more or less with the same topics, from the same topics on the top. The most important topic we are all dealing with is, all regulators are dealing with, is obviously the ESG topic, climate change and so on. We see today the meeting taking place in Glasgow, in Scotland. So it's really on top of the agenda, but otherwise, the topics that I really see that are really affecting all regulators is inclusive Apac. And these are topics like investor protection. It's a very important topic. I see a lot of notifications coming from regulators from Apac. And what I see that are taking this topic very seriously. And also too big to fail, Basel III is a big topic. We see all over the world. What we also see, these are so-called sanctions and AML KYC, which is obvious. This is what I can see the core risk for a bank, for reputation, and or for any institution, and also for regulators. Always will put a lot of effort to combat money laundering and tax evasion and so things. So what I see really is the worldwide the regulators are dealing with same topics, and also institutions that are worldwide active, cross-border activities or investments are all affected by the same regulations. Obviously, there are nuances from one regulator to another, but if I will put it all in sections, this is more or less the same topics.
Okay. Okay, thank you. With that much going on, as you put it, those are the many different regulations, the challenges of regulations such as AML on a global scale. What are the challenges of compliance here in such a multi-jurisdictional environment?
Yes, as you said before in the introduction, I was myself many years head of compliance of banks in a cross-border business. And I was, among others, also at Citigroup, which is a really cross-border big bank, big company. And the challenges are that, first of all, you have to comply with the local regulation where you are situated, where the business is, where you are, but also you have to comply with the regulators outside your borders if you are active over there, or even if you are serving customers over there, which makes the things even much more complicated. And for example, you see in Europe, for instance, within the EU, the regulations in which are the same regulatory frame. There are we call it local flavors of regulators are putting on top some changes. And you have to make sure that you are following also these small things which are really important if you are active in this jurisdiction. And this is a big challenge. A big challenge is also to monitor any change in the regulatory environment on all these jurisdictions. And what I mean with that is that not following, but make sure that you are doing it in a way that will allow you to implement it on time, and it's the way you should, the bank should do it, or the institution, which is a big challenge because, as we all know, it's all related to processes, to data, to IT resources, educating the staff, making sure that all are complying, and it's really a big task. And the compliance officers of this call, they know. I'm sure they know what I'm talking about. And of course, a big challenge is to make sure that the regulations, the internal regulations and process in the bank are up to date. And sometimes it's a big challenge, but my suggestion to all is when you identify such a change in the regulation, to make sure that all people involved, all departments are immediately informed and sitting together and to see how to solve the problem, or to see what solutions are in the markets and so on, because otherwise it could be too late. And what we also see that the time for regulation to enforce of them is getting shorter and shorter. And you see it all over the world. The regulators are coming with an update, coming with a new regulation or act or whatever, and the implementation date or the time to implement it is very short. And you have to make sure that everybody has to make sure that the institution is ready to do it on time and as required.
Okay. Of course, that's a lot to do. So
Yeah.
what approaches would you suggest that firms can take to achieve consistent and cost-effective compliance? We've seen a lot of tactical approaches, people trying now perhaps to take a more strategic approach. What's a good way to do this?
And the good way, as I said before, is first of all to make sure that the institution is aware of any change of the regulation in all jurisdictions. The institution is active, and has businesses, and this is not, it's a big challenge for itself. And also, second, to understand what is the implication on my organization, because it could be that there is a change in regulation that doesn't affect me or the organization at all, but it has to be analyzed. Furthermore, you have to make sure that many people in the organization that have maybe different looks on the same topic are also involved. Maybe for me, for my department, it's not an issue, but maybe for other departments, let's say risk management, is an important topic, whereas for compliance it's less important and so on, not on top of the priorities. And also to make sure that also the front, or if the front office or advisory process are affected, that the people from this departments are taking part in the discussions, pre-discussions already, and analysis. Also, if the institution is doing it early enough, one can go out to the market to see what's going on with other institutions, go to the Association of Bankers Association, for instance, and these compliance associations, and to ask what's going on, how are you dealing with it, how should we approach it? And maybe there is already a standard or the solution outside, or maybe there is already a RegTech company that already has some kind of solution that's really, with a small change, can already help you to be compliant in a quick way, and very important, and even in a most effective way. Also from cost, you can reduce the cost of implementation if you're doing things smartly. Also, very important, if you have data structure on your systems, make very good experience of myself is to put the data structure in a way that any change could be implemented quick and not wait to receive big releases and so on. That the data is so-called, I call it elastic, that you can do the changes very quick, but will really reduce the cost of implementation for everybody.
Okay, on that point, Jacob, on the point of data, are there particular types of RegTech data that can help here, and what can they help firms do?
Yes, RegTech is there are many companies around dealing with RegTech. I'm personally involved in such companies or initiative. Myself also had an idea how to implement it in the regulatory side. And it's really challenging. It's really exciting, I must say. And there are a lot of solutions. For instance, I can give an example for RegTech companies that are able to pull out data from, let's say, documentation, like prospectuses. I can give an example. Target market of the fund that it's really hiding in a paragraph somewhere, or restrictions of investors who is allowed to invest in this fund or financial product, or obviously ESG data, the ESG publications or reporting from companies, how to pull it out from documents, from the internet, because a lot of this data is not yet structured, and it's really a challenge to get this kind of data. And this is a challenge. I'm doing it on a daily basis, to sourcing this data or any kind of data. And one has to make sure also that these companies will allow you to ensure that you are always really on track, that you are doing it correctly, and ensure that the data quality is always the best possible data quality. It's obvious. This is I call it, it's a basic to everything, that the data is accurate and in top quality. And these companies can help you to do that. I'm personally, I can give from my own experience, I'm working in a tool that allows monitoring of regulatory changes, and now they're affecting the organization, and even on down to the smallest, to the deepest point of the organization, which is data attribute. How to do that, and you see the technologies are amazing today, and what I see also that the technologies are around. There are young people with great ideas, and if you mix the knowledge of so-called experienced people with these people, you can have great products. And obviously, also a big topic is cybersecurity. But I'm less specialist in this area. But you see great ideas in this area, and how companies are dealing with it. Yes.
Okay, thank you.
Yeah. Mm-hmm.
Thank you. Let's move on and tell us a little bit about how firms can ensure their compliance systems are future-proof as APAC regulation continues to evolve. I think the last panel talked something about somewhat about the evolution, and as you say, data quality, accuracy, and all these things. How can firms be sure they're going to be okay going forward?
You know, it's first of all, each organization should know what kind of data they are having, what the needs are, in order to understand the needs of the data and to understand even their own data structure. What we have now on all our system in a big organization, it's sometimes very difficult to integrate system, to understand what data we are having in this system, what this data we have on that system. And maybe we don't need any data because the data is existing on other platform in the same organization, or maybe already in the organization there is a unit sourcing data that we need for our business, let's say. So this is already the first challenge, to get all the knowledge what we are having, and then to go out to see what data we need and in which quality we need, how often we need the data, and then to see really, as I said before, the data accuracy and quality. And very important, if we're getting sourcing data, let's say regulatory data, for instance, let's take example, MiFID II target market data, something like that. You have to make sure that if there is a change in the regulation, the data is really reflecting the change, because otherwise it doesn't look well. You are working with wrong data, which really influences all your businesses. And this is a big challenge concerning data. And again, what we are also seeing is that in many regulations like the ESG, there is a lot of data around, non-structured data, but there we have a big lack of standardized data. And if you read all the publications for all the organizations worldwide, like IOSCO and so on, they're all saying there is not yet a standardized data that can flow between different parties in the financial world. And this is a big challenge to everybody, even, of course, to us as data vendors as well, because a lot of data is around but not structured, and very difficult to take the data, to map it, and again to ensure that the quality is accurate. Yeah.
Okay. Thank you very much indeed. And Jacob, we have some audience questions, so I'd like to put some of those to you. Okay, you mentioned ESG, so here's one on ESG. Yeah. And it asks, what are the ESG challenges from a data vendor perspective?
Yes, as I said before, first of all, there is a lack of data. Many companies worldwide are not yet obliged to report data, to disclose data. And regulators, financial regulators, are asking firms to how can I say it, to disclose this data to investors who are looking to investments in ESG products. And so there is a lack of data. And what we are seeing also, that regulators worldwide will force companies to do this reporting as a non-financial reporting. It will come out. So we will see a lot of data coming on us. It's a lot of data. But again, we have to make sure that we are getting the data in a structured way, because otherwise it will be difficult to make it available to our customers or to whatever user. And but we see a lot of initiative in this regard. Also in Europe, we see a lot of initiatives. As I said, from IOSCO, there are initiatives to create global standard of exchanging data between, let's say, product manufacturers and advisory banks, as well as to vendors. So the data flow will allow everybody to have the data in a structured way, obviously, which will reduce the cost of implementation to everybody. It's a big challenge, yeah.
It certainly is, but as you say, one to look forward to in some ways. Yes. Okay, and our next question, do you have advice for people trying to stay on top of all the different regulations across APAC?
I've no, but what I'm personally doing, I'm getting per day, I cannot even count how many notifications for any regulatory change from APAC, from Europe, from US, from the SEC, and from the Swiss FINMA, and from MAS in Singapore, and SFC in Hong Kong. Everybody, I'm getting it. So from my experience, when I get a message, I can see immediately if it's affecting us or no, our business. So I can say, is it affecting our, let's say, data offering in such way or something? And I think for every organization, the guys should always monitoring these updates, and also to understand very well the processes of the organization. And maybe if there is something which is really I can say maybe it's not affecting me, but I know how it could affect, let's say, the accountants of the firm, to forward it to them and say, guys, there is something that really could affect you. You have to do something in this regard, or something like a GDPR, for example, or privacy laws and so on. If there is a message, this doesn't affect me, it could affect our compliance department. So this is what I mean, this exchange of information and being on top all the time. This is crucial.
Okay, a cautionary note, and I think we need to finish there, Jacob. So thank you very, very much indeed for joining us today.
My pleasure.
And taking part in our fireside chat. Let me hand back to Andrew now for our next panel about transparency.
Thank you very much.
Thank you, Sarah. Thank you, Jacob. Before you go, Jacob, I was just going to ask you a question about sanctions.
Yes.
Screening and seeing if you see that as an issue, and how people are responding across the region, because it's certainly something we're seeing more of ourselves.
Yes, sanction is a big topic. For me as a former compliance officer, it was always on top of the list, as you can imagine. And I'm talking not only about, let's say in my case, Swiss sanctions, you see also European sanctions, US sanctions, whatever sanctions, or sanctions wherever the institution is active in. And to monitor the sanction, it's not an easy task because there are a lot of lists going around, the OFAC, for instance, the US OFAC, we know very well. And to monitor it and to make sure that we are not affected. And in order to make sure that we are not affected, you have to have top data quality, for instance, of the beneficial owners of the account of the institution. You have to make sure that all the ownership of the companies is open, that who is the beneficial owner, who are the owners. But there is a new dimension in this regard, sanctions, that also firms are sanctions, but I mean, not the firms, but also the shareholders of the shares of a company could be also sanctioned. And in this regard, we have our own service, and we provide a service that really flagged all instruments that are financial instruments on ISIN level that are affected by any kind of sanctions. OFAC, US, UN, whatever you can think of. And it's a big challenge. And also we can flag also even derivatives that are, where the underlying instruments are sanctioned, so-called. So the institution can really take the data into embedded into its.
It's an increasingly complex area, and you're seeing, reactionary sanctions. So I think it's going to be probably deserves its own whole discussion itself.
For sure.
For next time. Okay, thank you very much, Jacob.
You're welcome.
We're going to move on to our next session
Thank
now. We have a panel coming up now, which we will look at how to prepare for a new era of regulatory transparency. Moderating this session will be Liam Madden, Managing Director and General Counsel at Instanet. Liam is now based in Sydney, having joined Instanet in Hong Kong back in 2008. I'm sure those were very interesting times, Liam. I'm going to hand over to you now. Thank you very much.
Thanks, Andrew. Welcome, everybody. Welcome to the next session here. The panel will be discussing a topic today of preparing for a new era of regulatory transparency. What will the new Pan-Apac reporting environment look like, and how should financial institutions prepare for that? Okay, well, I'll ask our expert panel to introduce themselves to you in just a moment. But before that, we want you that are watching us all to get involved as well. To the right of the video, you'll see a box for questions and for polls. We're going to kick off with a poll in a moment. And then throughout the session, you can use the question box as well. So if you'd like to ask the experts any questions, we'll take the questions from the audience as long as I can multitask that properly throughout the discussion. So feel free to throw yours into the mix there. What we'll do just to get us started is I'll ask each of our panelists to introduce themselves briefly and just give us a quick idea of who they are and where they are. And we can start that with Irene, please.
Hi, good afternoon, everyone. My name is Irene. I'm an ex-Big Four partner focusing on finance and regulatory consulting for the Southeast Asian region. I'm currently also the co-chair of the EDM Council's Women in Data Professionals Board in Apac. And I'm also an adjunct faculty for data governance for Singapore Management University. So pleased to be here today.
Thanks, Irene. Why don't we go to Philip? You're the next on my screen anyway.
Hi, good morning, good afternoon. My name is Philip Miller. I'm co-CEO, co-founder at Solidatus. My interest in this field is I spent a good decade doing real-time regulatory reporting at Hsbc, where I was part of the IT implementation team all the way from Dodd-Frank to MiFID II. I have a real passion for the tech behind this and the problems that it created and the opportunities that it presented when those problems were solved.
Okay, thanks, Philip. Let's go to Struan.
Good afternoon, everyone. My name is Struan Lloyd. I'm based in Singapore. I'm the global business head for the global reg reporting solution at IHS Markit. I think the interesting fact that we can bring to the table is we've done 500 plus implementations globally for reg reporting, and that's across financial, large tier one banks, some regional banks, some global regional buy sides, custodians, retail brokers. So have really good experience across the challenges that all these firms in the different segments face. So looking forward to the panel.
Okay, thanks, Struan. And Shiv.
Yeah, hello, good afternoon, everyone. My name is Shiv Kumar, and I'm currently working in Standard Chartered Bank and looking at the transaction reporting compliance for last 2 years, specifically focusing on data quality and data governance in regulatory reporting. And in past, I've been working in regulatory reporting space, going through all the Asian and European regulations for last 8 years. And happy to see you all here, and happy to see you all here, and looking forward to great questions from you all.
Okay, thank you, Shiv. And last but not least, we have Malavika.
Thank you for having me here. So my name is Malavika Solanki. I work at the Derivatives Service Bureau as part of the management team there. The DSB, for those who aren't familiar with it, is the OTC derivative reference data provider for a range of identifiers and classification codes with respect to international standards organization mandates, etc. Specifically, though, what's alongside doing what I do at the DSB, I also serve as the designated DSB officer on the committee that sets the product definitions that are used by all in industry across a range of institution types. And I also serve on a number of ISO committees looking at reference data matters.
Okay, thank you. All right, what we're going to do to get us moving is open up with the poll question. So we'll invite all of the audience to take a look at that and to cast your vote. So the question is, what do you consider to be the biggest data management challenge in regulatory reporting? You've got a few options there. We've got siloed data repositories, manual processes, lack of data standards, poor data quality, complexity of integration, legacy systems and processes. So I'd encourage everyone to have a think about that and to pick one of those options there, and we'll come back to that in a moment. So while the audience is voting, we'll kick off with the first question for the panel. To set the scene for today's discussion, how would you describe the evolution of the Apac regulatory reporting landscape to where we are now? What has been the impact of regulatory change on financial institutions' data and technology architectures? Malavika, can you get us away?
A simple question to begin then. So if we look really at where the regulatory focus has been moving towards, it's been increasingly looking at risk aggregation, looking to mitigate market abuse activities where they exist, and also relying much more on the use of international standards for a range of both reference data, other data, but also messaging purposes. And that those of you like have been, at least in my view, that the central pillars of the direction of travel adopted by regulators around the world, but specifically around APAC as well. If we then break that down a little bit more, and let's look at what the regulators have been doing in that space. Australia, ASIC this year have already run one consultation on regulatory reporting. There's another one expected to come later on in the next few months. Singapore has already run one consultation this year. If a number of other regulators from Hong Kong to Japan and beyond have also been in the public domain commenting on changes they expect around reporting. Specifically, if one looks at the nature of these things, a lot of it at the moment seems to have been focused on improving the quality and the consistency of the data being reported in its existing formats. If one looks at what's being sent to trade repositories, there was a global shift a few years ago in a study undertaken to look at whether the quality of what's going in is sufficiently of sufficient quality to essentially facilitate good quality information for industry, but also for regulators to be able to examine and understand in a seamless manner exactly what is being traded by whom and under what circumstances. So there's an increased focus really on facilitating that data quality improvement, but also on trying increasingly to get the balance right between what is being asked for and explaining the purpose of how some of this stuff is going to be used.
Okay, yeah, no, I understand. I think the purpose part of it for those of us that have to answer all these requests is kind of key to it, isn't it? Philip, can you give us your view on this one?
So I guess my view will come from the technology lens. So I agree with all the consistency and quality commentary. I think internally inside organisations, if you go back about 10 years, you saw organisations that were working very much in a front disconnected from back world, where there wasn't a kind of flow of information that was ubiquitous over the whole organisation. Quality of data in the front office was very different from quality of data in the back office. And that's actually quite important, because the back office was often having to repair a lot of data after the fact, where the front office had really clean data in many respects, where it made sense for their scorecards. The back office was always having to do like a band-aid job on things. And seeing that flow of data cleaning itself up out of necessity, actually, for me, was one of the, probably one of the best benefits of the whole regulatory reporting exercise at a technical level. The back office started to get really good data. There were less reconciliations that needed to take place, and they still took place. There was less adjustments that needed to take place. And the final one was, because of the nature of a lot of regulatory reporting, it became real time, which meant the back office was actually starting to get flow. It was seeing things as they happened rather than end of day or at batch points, which changed how banks saw their processing. And because the global scene was actually quite harmonized over a lot of the regulatory reporting, there was a lot of economies of scale that could be brought in to create things like back office trade repositories where they hadn't been needed before. And that in itself has a real benefit moving forward for all sorts of other purposes. If you get that stuff right and you don't just concentrate on the actual regulatory reporting fields themselves, the whole big data revolution was probably bootstrapped a bit by the regulatory reporting revolution. Those data sources existed, so there was a lot of architectural change for the better. And the quality and consistency angles that the regulators are most interested in fell off the back of that, to be honest.
Yeah, well, I think you touched there on data harmonization. So, Struan, can I get your perspective on that part of the puzzle?
Yeah, absolutely. And maybe just to add, I think, I was fortunate enough to have kicked off the DTCC trade repository in Apac. So I kind of worked really closely with the regulators, in Apac around, driving what the regulation looked like. So ASIC and MAS, definitely lined up to EMEA. We saw a shift from Hong Kong where they were kind of caught in between. They were really trying to standardize to EMEA, but then, they had some requirements on their own. So that became a little bit more challenging. We actually seen Korea align very closely with Hong Kong, where they're trying to adopt a standard, but at the same time, they have their own internal requirements. And then Japan, interestingly enough, are going through a complete rewrite in October of next year. So I think what's happening is obviously the standardization was, for me, is critical. If we can get global standardization, I think that really helps the firms globally. When they're doing a build, I think the challenge today is there's so many nuances in each jurisdiction. You have the real time in the US, you have T+1 in most of Asia and Europe, and then you have, at the moment you can report T+7 to the JFSA. So I think firms are struggling to grapple with kind of the variables across each regime, and that doesn't help at all. In terms of standardizing, I think, one thing that keeps coming up is, especially in the dual-sided regimes, is the sharing and pairing. That really is a massive challenge to the industry. They haven't really got that right, and until they get that right, the regulators themselves can't really look at the data holistically and really get the good quality data that they're looking for. So I think, the UTI piece has been going on for years and years, and will continue to be an issue until they resolve that. But really, I suppose, the non-standardization does create the pitfalls and the challenges that, certainly a large organization, if you've got multiple regimes, you're really having to a lot of the banks, for example, will have built a CFTC, which is real-time reporting, and a lot of the way they've built for other jurisdictions is actually on a real-time basis. Now that the CFTC is changing in May of next year, FML will be supported, but at some stage we expect XML to kick in. So again, firms are having to adopt what they've built globally because the CFTC is changing. Obviously, firms who have one or two jurisdictions are certainly at an advantage, in that they really just focus on that particular one. But I think, my point here is really standardization is critical, and groups like ISDA, AIMA are absolutely imperative to working with the banks and the buy sides to make sure we drive that. I still think the sharing and pairing on UTI is absolutely critical, and getting to a solution, that works for both banks and buy sides is critical to getting to the end point. Yeah.
Okay, thanks, John. We'll pop back to our poll question now, because I've got the results in, and it's pretty stark what most people seem to be concerned about here. There's a clear winner. Legacy systems and processes, I think, Philip, you touched on that. Front office and back office didn't even have systems that could talk to one another. Obviously, poor data quality is there as a distant second, I guess you'd say. Complexity of integration, we've touched on that as well, I think. Having a look at these results, Shiv, what do you take from that? What's your perspective after having a look at that poll result?
So I would say I expected legacy system and processes to be one of the key factors, because when initially these regulations kicked in, many of the firms, they just jumped in and started building out reports from their existing systems and legacy systems. But now what they have realized is that with so many regulations coming in and so many similar data required or similar kind of reporting required, that became much more challenging, and with the kind of differences in Hong Kong and Korea highlighted earlier, so it became very challenging to fulfill all those from the legacy systems. So what many banks and firms now are doing is that they are rebuilding their reporting platforms, and they are now taking advantage of data lakes and building data lakes around a reporting platform as well. So that goes well, and that's what industry is moving towards. And the data quality being the second one, I think with 7 to 8 years of reporting in the industry now, not only regulators are also looking at the quality of data. They are able to digest and see through the reports very well, and they are now started looking at the data quality. So I think that concern rightly shows in the poll as well.
Okay, thanks, Shiv. Just before we move on to the next question, I've received an audience question here, and it's probably got Struan's name written all over it, because you were the one talking about data standards. And the question is essentially, we know that we need these data standards for reporting, but we're not there yet, is what the questioner has said. The question is, what's going to tip the balance for these standards? How are we going to get there?
Sure. So I think we have to look to the major jurisdictions. So I think the biggest gap is obviously CFTC real time versus EMEA, which is T+1. You've also then got the single versus dual sided. So in the US, it's single sided reporting versus dual sided. So you're probably your two biggest jurisdictions who are, really quite different. So I think kind of getting those lined up is much easier said than done, and there's been conversations going on for years. I think regulators, personally, my personal opinion here is I think regulators in the dual-sided regimes do definitely get to see more. Certainly once they start doing the sharing and pairing, for example, you'd be able to see both sides of the transaction and you'd identify errors. So I think, that kind of as a control point of view, I think is really powerful. Whereas single-sided, really, the US regulators are relying on one side to report correctly. They can't really track that and see whether that's it's a single side. They take that point of view. That said, it's there's obviously to change from real-time reporting to T+1 or vice versa takes a lot of time and effort. So we can all agree to a standard, but I think the implementation side of things is critical. I mean, if you look at the CFTC rewrite, that's been going on for years. There's a real expectation that May deadline is now going to shift potentially 12 to 18 months as per is to conversations, which are definitely to be confirmed, as the regulator standard still May, but there is a strong feeling that will move. And I think what that does is it really shows that it's easy to get to an agreement on how we should report, but actually doing the implementation is super challenging. But again, I think the industry through ISDA, through AIMA, and the associations are critical to keep that engagement, keep driving standardization with the regulators.
Yeah, actually,
if I may just chip in very briefly on that one.
Of course.
With respect to the standards, one of the things in particular, if one looks at what's going on in places like Australia and Singapore, who've already consulted on these things, is they are increasingly talking about using some of the international standards for reference data, but things like the UPI, which are, they call out very explicitly in those consultations. There are now questions about what should the implementation time be, rather than is it coming. So it's very, to that point, the markers, the indicators are all there, and now it's a question of is it 12 months away or 18 months away realistically? But that's about it.
Yeah, they're sort of presupposing the answer, and it's a timetable question. It ties in with our next question, which I'll ask Irene to jump in on once I've read it out. This one's about what are the considerations for ensuring data quality and consistency across the regulatory reporting function, and what issues are we likely to face trying to achieve this?
Thank you so much. And what I want to echo was, what one of the panelists mentioned earlier about data quality being actually, something that should be enforced right at the front. So in fact, we were looking at some of the, reporting functions at the back, and we started to realize they were doing tons. Okay, there were tens of thousands of adjustments right at the back end. Now, there were various reasons, right? The first reason was because of legacy systems, which were not able to house all those new innovative products that were coming on. And these were then passed through as manual adjustments right at the back end by the financial reporting team. Now, others were, for example, that the data was misunderstood right at the front as well. And therefore, at the back end, they needed to do certain adjustments, reclassifications to make sure that they're appropriately reported to the regulators. So what I find is that, the opportunity exists for people to be able to coach the people right at the front office or the people who are collecting that data up front to be able to enforce those data quality standards up there. And of course, we'll have to impose KPIs, data quality rules to be able to measure that upfront before it flows to the back. Because by the time it comes to the back end reporting, it becomes a little bit too little, too late by the time we start to do those adjustments and those reviews. So in fact, when we are looking at the audited reports of these financial institutions, right? So half of the audit points come from the fact that there was there was poor interpretation of the results, of what the regulators wanted, or a wrong data model, for example. However, there was also another half that actually came from the fact that there was inappropriate data quality. So what do I mean by data quality issues? And this is especially more so for off-balance sheet items such as corporate guarantees that were not completely reported at the back end.
Okay, thanks, Irene. Shiv, I was going to ask you about the data quality, because I'm assuming that the implementation side of things is something that you've had to grapple with.
Yes. So, like one of the panelists mentioned earlier, one of the key theme emerging among data quality implementation is that certain data originates into the front office systems and they are being reported, but the front office is not very keen on the accuracy of those data points, because they are not so much critical from a business and front office point of view, but fields like execution date time are very critical on the reporting side, and those are hardly captured correctly or will input at wrong time. So one of the practical implementation problem comes in that certain business areas don't pay attention to the level of data accuracy and data quality required on the reporting side, and the industry view was that that's something happens in the back end and they do multiple corrections in the back end to ensure the data quality. That view is now changing, and the front office is now gearing up to the right expectation of data quality on the reporting side as well. And the other aspect is that the specifically the banks and financial firms are now gearing up to the um, the data lineage on the from the front to back, so that the loss of data as well as is not there. And this data lineage work from front to back ensures that uh, this work will ensure that this is reusable in other areas of the bank as well. So now banks have started looking the reporting front to back flow as a strategic flow as well, to develop other applications on this flow as well. So
Yeah.
the data quality is now in focus for sure.
Yeah, that's interesting. I mean, heaven forbid we've ever had to convince front office that we need them to do something other than just trade, and that the data is important. You mentioned, Shiv, data lineage. What I'd like to ask Philip is, why is data lineage so important, and why is it such a challenge to get the damn thing right?
Well, it's the word that's just sitting there above my shoulder, right? So
had to throw it to you, obviously.
Yeah, well, thank you very much. If you're a frontliner and if you've been working, I mean, I come from the technology aspect, but I spent 20 plus years in tech and investment banking. The biggest thing the biggest thing that you first appreciate is that the front office see a screen like that, Bloomberg in the day or whatever, and every piece of data is presented to them with this one view. They have no appreciation of the mesh that's behind the scenes of getting that data onto that screen. Even if it is Bloomberg, there is a spider's web of information sources that sit behind. And so when the guy at the front office says, just report that to DTCC on my behalf, so it goes to CFTC and Europeans and some guys in Asia, what I don't see is that there's perhaps 50 or 100 different computer systems sitting behind the scenes. The lineage for me, so I'm lineage first, right? So when I go in, I am not looking at the data, I'm looking at all my connectivity. I'm not looking at the quality, I'm just looking at I'm looking for the right sources. I want to find the right sources immediately. And the inability to do that at the beginning of a project can lead to a data quality or consistency problem that's unexpected, 12 months later. Why have you put that figure there? Because you don't know where your data's coming from, my friend. And that's really the nuts and the bolts of a lot of the problems that we see. And the reason why a lot of this regulation exists in the first place is because, frankly, you don't know how the information got onto that screen. And me as a technologist, I dip in and out of projects. You've been trading FX forever, haven't you? You tell me how your system is built. Oh no, but you see, there's a lot of rules that say I can't use the production systems. So you tinker with things daily. Oh, you're using a spreadsheet today. Oh, are you? That's great. Fantastic. Thanks for getting the information from that spreadsheet and putting it into your trade so that I now know where it comes from. So the lineage for me, the lineage first approach for me is about getting that and nailing it down and understanding when it changes from day to day and being able to say, actually, a week ago, that's what you were doing. And you're doing that today. And that's particularly why your consistency problem's coming up. Or you know what? You're using that system over there. Well, it just doesn't have good data quality. And actually, you need to pay for that to be fixed, or you need to find a better quality source. And being able to show people the lineage, show people where things are coming from. My experience has been that when you show people where data comes from, these guys are smart ass, right? They don't get to where they are without being smart. They just go, no, that's wrong. That's wrong. Oh, I didn't realize I was using that. And oh, in that circumstance, I should be using that thing. And being able to get that lineage into their faces, that's brilliant. The flip side is for the regulator, in my humble opinion, they are interested in the lineage of data because consistency, I think, is number one for a regulator. The quality as in accuracy quality is very important, but consistency, they want to make sure you're in control of your data sources. Accuracy, a very close second, but if I've got the same field being reported in 10 different ways to a regulator or several regulators, if that figure is inconsistent between those reports, you can infer quite quickly that I don't have control of my stuff. And then I want to evidence that, and I want to go to the regulator. Actually, there's a reason for this, and look, here's my lineage, and that's how it comes out. If you can't do that, then the regulator quite rightly assumes that you need more regulation.
Yeah.
And you'll pay for it in another way. Lineage is complicated to do, but once it's right, it is such a benefit for the organization, such a benefit. In every respect, it will make a cheaper, more transparent, and more governed and controlled organization. And consistency will just fall out. That's my soapbox piece. Thank you for listening.
No, that's very good. I mean, I think, it's very clear. Now Malavika, when we're talking about data lineage and the challenges, what's your take on that?
So I'd echo Philip, but actually I'd take it a couple of steps further. So let's look at practical examples. Quite everything that Philip said holds true, but at a very, very practical level, if you have control of your lineage, as the regulatory reporting need evolves or your internal needs evolve, which is the nature of the beast, that's just the way the world works. We go forwards, even if it is relying on historical data. Fundamentally, if you have control of your lineage, you're better able to start reporting things accurately. So prime example, there was a regulator who not long ago asked for a tenor to be reported instead of the maturity date in a certain instance. And it caused mayhem for a while, and people literally threw their hands in the air, and it took an awful lot of time to get people to actually be able to know where to report and sing. And it was surprising the number of questions we received, because we're a utility rather than competitor. People seem to be more comfortable asking questions that they may not otherwise ask. But the number of questions we got from major institutions saying, hey, where do I get my tenor from? How am I reporting my tenor? And if you ask someone, to Philip's point, ask someone who's trading what a five-year swap is, they'll tell you exactly what they're doing. And if all you've been reporting is the date, for very good reasons, because a back office system typically holds a date because you're looking at maturity and risk management and all those other things. It doesn't necessarily need the tenor, but if you don't have control of your sources and your lineage and all of that stuff along the pipeline, suddenly when you have to report the tenor alongside the date, you're spending an awful lot of money, there's an awful lot of panic, and you're potentially having to start thinking about start having to search in the first instance to figure out where in your systems chain is that data point held, and fundamentally restructuring parts of your regulatory reporting regime to cater for it. Whereas if you have a handle on your lineage and you're thinking about how do I keep track of my values, look at my sources, you can also use some of your, if to the extent you've got good data, you can also use that to be able to run your own internal validations. System A says this, system B says this, here's my set of rules, do the two match? How do I pick up errors earlier in the process so that I don't have 50 systems replicating the problem, I have 3, and I'm dealing with it earlier in source. The other thing also, and Struan mentioned this earlier, is working really with international representation, industry representation groups. There are many of them for things like the UPI. There are bodies where regulators, trade associations, and market participants all come together to look at some of these things, to agree how best to facilitate consistency, certainly for things like OTC derivatives reporting, etc. Also plug yourself into those so that you can then, it's not the consistency, it's not, where I differ from Phil is that I don't think the systems alone can fix it. I think you also have to understand if something is open to interpretation and increasingly regulators and industry are trying to close it, you also have to understand and agree how every part of your organization is going to interpret a piece of data.
Oh, I don't think we're disagreeing at all. I'm a big person for semantics and having an understanding of what a word means. I mean, tenor is a fairly innocuous word, but party, on the other hand, can mean 1,000 different things to 15 people. And getting the understanding of how party, for example, is used in context is important. I think lineage, it follows the mantra that I've got. Lineage enables start fast. There's a lot of, being able to get this right, lineage, enables you to get to the point of understanding what a project costs and how feasible it is really, really quickly. And without that, what you'll have is fail really badly. You'll take a year to start a project and it will just go pop. And that's why we're still not defining UTI properly. And, you know, goodness knows how many other things, because actually we have so many different views on things and we don't really understand the other person's view properly in context.
Yeah. I'll roll to the next question, which is tangential to this one, and also will pick up the question we've just got from the audience a couple of minutes ago. And it's a good one. We want to improve our data lineage to help with reporting, but only have a limited budget. We all have limited budgets to some extent, right? Where should we direct our investment? So the question to the panel that we have here is, how can RegTech solutions help you address these issues, and what advice would the panelists have for adopting RegTech into the regulatory reporting function? And Struan, we're over to you on that one.
Sure. So I think probably to kick off, the most important thing is firms have quickly realized that there's no competitive advantage of being more regulated than the next. So what we call this herd mentality seems to be really, really flavor of the day. So by using a RegTech solution who, maybe has 100 to 500 clients that they're actually reporting for, they've actually already built up, the eligibility. They've done integration to potentially multiple source systems that you're already using. They've applied a rules engine, and they have, the data lineage is something that they can provide. But probably the biggest benefit is the cost. If you look at the internal cost to manage this for a large organization, we've mentioned the complexity. I think the changing rules are something that no one's really got to grips with. It's just, if you look from 2012 to the implementation of CFTC to today, there's not been a period of 6 months where banks have been able, buy sides have been able to sit back and say, you know what, we've now got 2 years to look at what we've built. It's been constant change. If you look at the next 12 months, CFTC, got a mere rewrite, we've got ASIC and MAS consultations, we've got Japan, we've got Korea. I'm sure I've missed something there, but that in the next 12 to 24 months means I don't have time to stop and look at what I'm doing. So are there vendors out there that can help me get through this? And I can actually, if I make a decision on a rule as to, my determination of that particular rule in the US could be wrong. I'm then an outlier versus the other 20, 30 banks. So that really puts me at a disadvantage. So I think RegTech can certainly help you in terms of, using the shared intel from their client bases. The change management side, there's amortization across, for example, our clients. If we make a change in the US, we're not charging on a per client basis. We're saying that cost to us is X. We can amortize that across our client base. We can also then discuss, if we're not sure on a rule, we can kick off a working group and we can say, this is our interpretation. How does the rest of our, what does our user group feel? And I think there's a lot of strength in that. We can get to a consensus. Sometimes it may not be 100% of the group that agrees, but I think we get to certainly 90 to 95% most times with a few outliers. But I think those are probably the most important and the key benefits of using RegTech.
I'm going to launch into a soundbite on this. What you need is something.
Where you go.
What you need is something that will use all the resources, all the intellectual property, all the SMEs very quickly, and you need something that enables them then to consume. There's a journey in to getting things into your lineage solution, and then there's a journey out which enables it to be used by as many people as possible. So something collaborative and engaging. That gets everybody to share their intellectual property is key.
Irene, you've come from the consultancy side of things. What's your take on this? I'm sure you've had many clients ring up and give you the mission impossible of fix all this for me, but I've only got X dollars. What do we do?
Right. So I'll see, the RegTech solutions to have actually 3 main benefits. The first of which is on data. Secondly, to provide insights. And third is to give an actionable outcome. So let me elaborate on this, right? So data, what do I mean by that? And we just now talked at length about the data standards. So RegTech solutions should be able to provide, you with the consistency of the definition, not just in one, regulatory report, but across multiple regulatory reports. That needs to be ensured. The second is also to ensure the quality of the data itself, right? You don't want to be the ones doing manual reconciliations and adjustments over there. You want to have the assurance over the data quality. The third one on data is also time saved in terms of automation of producing the report in itself. So, and it's not just the BAU report, because, if it's BAU, we can actually automate that quite quickly. However, it's now, coming into a space of ad hoc and crisis reporting that you want to be able to do so as quickly as possible. In fact, we did a POC with the banking industry and MAS just 2 years ago. And the results actually that came from a RegTech solution, just to look at harmonizing the data itself, saved the organizations about 90%, more than 90% of the time, just to produce a report. So that's on data. The second part on insights is on performing analysis and highlighting, potential errors or inconsistencies across the reports. And lastly, on actions itself, it also must give you an actionable item. So what do I mean by this? So if you highlight, because of this dashboard, right, you say there's potentially an error, compared to last year, or when you compare it against, what you're expecting out of the outcome. Now, what you want to do is to be able to suggest adjustments and to be able to help to post those adjustments accordingly as well. So I would see that the RegTech solutions can actually be used in these three main areas.
Okay, thanks, Irene. I'll keep things moving along because the time is actually disappearing quite quickly, which is always a good sign. So with data, let's come to data standards now. There's an ongoing push towards global data standards, obviously, to align regulatory reporting. I spoke about Mission Impossible with cheap RegTech, but maybe this is the real Mission Impossible. What progress is being made on this mythical beast of a global data standard, and what's that going to mean for financial institutions? Malavika, can you start us off on this one?
Mythical beast indeed. So let's talk about what's tangibly happened so far, or at least in train, at least I'll kick that off. So if one looks at data standards, the first thing to look at is data standards for what? Because there are different parts of all of this. It's not one size fits all, because that's just not the way the world works. You've got data standards for messaging, ISO 20022, which is something increasingly regulators are relying on as one of other options. But you're starting to see more focus on that from regulators. If one looks at data standards with respect to reference data, there are a host of things out there for either classification codes or identification codes, or in fact, human readable short names. Looking specifically at those, if you look at the standard for the classification of OTC derivatives, looking specifically at that subsegment, if you look at those, the classification code standards evolved in 2019 from the existing 2015 version, which most of industry is relying on around the world. There's in fact now a maintenance agency that's come into being for that, which means that those values are likely to evolve about once. If there are new values, they're likely to start evolving at least once a year. So that fundamentally changes the basis on which people need to consume their data and think about how it is they'll be reporting information. You've also got, again, looking at OTC derivatives, you've got the ISIN, the International Standards Organization standard for the ISIN, that evolved in 2020. We have the unique product identifier, or the UPI, which is what we touched on earlier in the conversation. That is coming, there's an ISO standard for that is in draft form at the moment and expected to be final and come into being on the 15th of November of this year if all goes to plan. So that then creates the foundation for a lot of the data quality changes that will need to be made in APAC and and around the world in the next 18 to 24 months. And last but not least, still sticking with OTC derivatives, because why wouldn't we try and look at the whole thing, I guess, holistically as an industry? The standard for determining what the short name of an instrument should be is going to be, the review process is due to commence this month, and then that will be subject to finalization at some point in next year. So what we're saying basically is there are a range of standards, many of which have either been recently reviewed or are about to be reviewed, or in fact come into being. So what that really means is people need, back to that point around lineage and sources and data quality, you really need to be thinking about how do you use this stuff? How do you get good quality? What sources are you looking at? Where in your lineage pipeline are each of these things used? And how do you fix this once it's sourced so that flows through properly through all your systems?
Okay, now Philip, you're on ISO, I believe. Where are we up to? What's our?
When are you going to solve it all? Talking about stuff. I mean, the standard is there. The part that I guess I'm most interested in some respects is the interoperability part of it. And also there's some modernization that needs to be done. Very technical, but we need to move from XML to JSON at some point. And, you know, there's a lot of people behind that you know, there's a lot of politics behind this sort of thing. Look, standards at the end of the day, they need to be interoperable. People have to have a migration path into using a good standard. We see it a lot where, you know, a new standard is created and it's so radically different from the old one that people just can't see a way of moving, and so they go back to CSV. I mean, we can't have that. We've got to be able to move to a good global standard consistently applied. But when my view of going through all the regulatory reporting changes of the last 10 years was that all the regulators kind of tried to one up themselves in some ways over what the definitions of this were and the definitions of that were. They need to get into a room and they need to sort it out. And it doesn't need to be a committee of 50 people. It needs to be 4 or 5 regulators, like's been said, CFTC, you know, FCA, a couple from Asia, and just nail it and say, this is what it is. And then you can have some extensions for jurisdictions, but basically the base standard is defined.
Okay, so predicated on regulators cooperating with one another in order to make
and they're all
life easier for the rest of us.
They all want the markets to operate safely. So the market won't operate safely while there is an inconsistent approach to standards.
Yeah, and I think that's the
just
key.
one thing to say on that. What's interesting is
in.
certainly for the reference data pieces, you're seeing the regulatory oversight committee formed precisely for this purpose, and their governance mandate was enhanced last year precisely to start addressing this issue.
And I think maybe just one thing to add as well. Standards are fantastic, and I think, you know, certainly the way forward. I think what is challenging though is a lot of large firms have built, for example, to FPML. So if we have a change from FPML to ISO, that change is really significant. I mean, if you looked at the CFTC, there was, before DTCC allowed FPML, there was really kind of almost a two-pronged stage. They were looking at removing the support for FPML to the XML, and then, you know, in 12 months, then creating ISO. So I think, you know, standardization is great, but also the implementation, as we go into a global standard, we really need to kind of consider people who are building to these new requirements, and that it's not just a flick of a switch. This is, you know, multi-year projects to get this right. So agree the standards, but also make sure that we leave the industry with enough time to actually meet the standards.
I think that's critical, isn't it? All right. Well, we still had questions to go, but unfortunately, our time is up. So if I could, on behalf of the A-Team Group, thank each of our panelists. It's been a very stimulating discussion. If I'm completely honest, I've probably kept up with about 50% of it. I'm not a technologist. I'm a mere lawyer, and spreadsheets terrify me. But I think what we've had the benefit of with this panel today is a significant amount of expertise and experience in a very difficult area for those of us that are at the coalface trying to work all of this stuff out. So I've learned a lot, and I trust everybody else in the audience has as well. So again, thank you, panelists. You've made my job very, very easy today, which is always good. And I will now hand back to Andrew. Thanks, Andrew.
Thank you, Liam. Great job. Great discussion, everybody. I thought that was a really good down in the weeds discussion on the challenges around the whole underlying data issue that we're all facing. So I really appreciate that. We are going to move on now. Time is ticking on. So I'm going to hand back to Sarah, who is going to be running our next fireside chat with Lorraine Waters, Chief Data Officer at Solidatus. Over to you, Sarah and Lorraine.
Thank you, Andrew. And as Andrew mentioned, our topic is how to deliver compliance and business insight with a lineage-first approach. And I'm going to be talking to Lorraine Waters, who's the CDO at Solidatus. Lorraine has recently taken on the role of CDO at Solidatus, thought to be the first CDO of UK FinTech, and is responsible for championing the platform and engaging with Solidatus' community of key stakeholders, including current and future clients, regulators, and strategic partners. Prior to this, Lorraine was MD and Chief Data Officer for Global Compliance at Hsbc, where she ran an industry-leading data management practice commended by regulators. She also won many awards, including CDO of the Year 2018, Data Management Practitioner of the Year, an A-Team Award. And Lorraine has also been listed in the top 100 Global Data Power Women. That was in 2020. So welcome, Lorraine. Thank you so much for joining us this morning.
Thanks, Sarah. It's really, really good to be here. Really appreciate being able to connect again with friends and colleagues in the Asia Pacific region. Thank you.
Excellent. Let's start the conversation then, Lorraine. And can I ask you, what are the challenges of regulatory data sourcing and management for compliance?
The challenges. So I think the accessibility of data is one key challenge for an organization. Particularly for regulatory data, it's usually a consumer of the data. So for example, risk or finance or compliance, who have to complete the regulatory return on behalf of the organization, but they're not usually the source, obviously, of the data, or even the owners or producers of the data. So they need to negotiate with the originating business for access to and access to the right data. It also sort of falls to those consumers of the data to interpret what the regulatory requirement is and to identify the right data. And it can often be difficult for a consumer of the data because they talk a different language to the producers. You know, for example, if what makes up loss given default, LGD. You know, there are a number of critical data elements that make up that particular piece of data that's critical for risk and for finance. And, you know, even from my financial crime and regulatory compliance background, it was often difficult to keep up to date with what were the valid transaction types and transaction type codes for AML transaction monitoring, for example, as the businesses developed new products and transaction types. So, you know, the businesses are the subject matter experts in the data that they produce. So consumers need to engage with them to ensure they're talking about the same data and for key regulatory reporting. And some of the examples you asked about, to be able to do that, I have come across organizations that will have a producer-consumer contract. So where both sides agree what data is important and set out thresholds and requirements for the quality and the accessibility of that data. And in some organizations, I've seen a shared data dictionary. So where critical data elements are proposed, the definition is agreed, and the data dictionary is made accessible to all, so everybody knows they're talking about the right data. Well, you know, that takes a lot of time and takes a lot of negotiation, I have to admit. Another example might be having a common data model, which requires functions across the organization to agree on common data standards and definitions and to use the same data model. But of course, you know, being Solidatus, I'm also going to say that sort of auto ingest of business glossaries and automated or inferred mapping, which you then agree, plus strong visualization and auditability is really important. But the fundamental thing is, for regulatory reporting, you need to be able to show the regulator that you have end-to-end control over the data and agreed end-to-end control over the data. So having, you know, automated documented data lineage that you can show at any given time is really powerful for a regulator to see that it's not just the compliance function or the risk and finance function, you know, who have created this end-to-end view. It has been agreed with the SMEs who are typically in the business, the data owners in the business.
Okay, excellent. You touched on the data lineage there. So tell us a little bit about its importance and also the importance of governance and quality, and sort of to what extent these work and how you define them.
In terms of definitions, you know, there's some really helpful definitions of lineage governance and quality, by the likes of, say, Gartner or even EDM Council. But to me, data lineage is the end-to-end control and visualization of your data. Now, my good friend Colin Gibson at EDM Council has likened it to the family tree of data, which I think is quite helpful. You can go back in time and forward in time, to understand the provenance and the use through transformation, from source through transformation to use and purpose. So, that's the kind of end-to-end flow visualization for data lineage. Governance, data governance, very similar to corporate governance. You need to be able to get the right data to the right people at the right time to make the right decisions. And really, governance is that framework that you set out on how you will manage, how all of you who have a role in the management of data will manage data. And of course, data quality, very clear definitions of the 7 or 8 dimensions of data quality, from completeness, validity, accuracy, etc. In the industry today. And, I think one of the things I am seeing is people are starting to realize that so much has been pumped into measuring the quality of data and endless remediation of data issues that people are starting to think, there's got to be a better way than just detecting data quality issues. And so, at Solidatus, and thankfully I'm seeing across the industry, that people are starting to say, okay, how can we prevent rather than detect these data issues? And certainly one of the best ways I've seen, and I'm an advocate for, is lineage first. So looking to identify the flow of the data and start to build out your data lineage, which helps you to identify where you have control weaknesses in your end-to-end data flow. So instead of endless detecting and remediation, you're preventing, you're identifying control weaknesses, fixing them across the flow. And it helps to reduce massively the overhead that I've seen organizations put into, including some of those that I've worked for in terms of data quality measurement and remediation.
Okay, so if a data lineage first approach certainly helps with data quality, how can it help to ease compliance and deliver business benefits?
Well, anything that an organization can do to control the flow of data end to end is going to deliver massive business benefits. When you understand the data blueprint of your organization, and you can see how data flows in, where it flows to, how it becomes transformed into the various key business processes, key risk and finance reports, key outcomes, then you can harness that data to be able to deliver better outcomes. We certainly see that customers that who have cracked it, who have developed that end-to-end view or blueprint of data in their organization, have gone on to say, okay, well, if I can do that, I can solve my cross-border data sharing problem. I can solve my data lineage required for BCBS 239, for CCAR, for MiFID, for a number of data-related regulations. We've seen how people can see at a glance where PII data, so personal data, is for data privacy legislation and regulations. And as they continue to evolve, it really helps organizations to be able to see what the ripple effect is across their organization when a regulation changes, so they can model the cost of future change. And most recently, we're starting to see people try and understand how to map their ESG obligations. We've seen a number of regulations like TCFD in the EU, where organizations are required to prove the provenance of their data that's going into their financial reports and into their regulatory disclosures. So ESG is such a broad church, of environment, social governance, that it is difficult for an organization to pull all of the threads together to understand what activity is going on to improve the data required for reporting and disclosures. So data lineage is certainly helping those organizations who have woken up to the fact that data is going to play a huge part in not just improving the reporting around ESG, but improving the governance, the internal governance structures, to make sure that somebody in the organization, a named accountable individual, is taking responsibility for the plan, so how people move towards meeting their commitments that they have made on ESG. So lineage first is basically, instead of the old-fashioned way of doing data management, identify your CDEs, profile the quality, develop high-level data flow, validate system controls, and repeat. That's the old-fashioned way. We're all starting to recognize that you can't keep doing the same thing and expect a different outcome. So by changing to doing your lineage first, then you can start to identify control weaknesses and remedy them, and put in place safeguards to prevent the data issues that data quality testing has been detecting all these years.
Okay, that's very interesting, because obviously, as you mentioned, data quality has been a very difficult issue for firms for a very, very, very long time.
Definitely.
To find a way through that. It's great.
Time for a new approach, Sarah, definitely.
Yeah, absolutely. Sounds interesting. Thank you. So, Lorraine, can you pull that all together and give us sort of an example of a use case and explain the benefits that have come out of that?
Certainly. So, as I said, I'm delighted to be seeing, a wave of change coming in the number of organizations who are taking up this lineage first approach. And it does require partnership between the data teams, the architecture teams, and the IT teams. And indeed, I'm seeing some of the regulators now espousing this approach, certainly out of the UK and some of the US regulators. So organizations are, when they've taken a lineage first approach, are able to show the regulator that end-to-end flow of data for things like CCAR, as I mentioned, which is really powerful, because that's showing that you have an agreed end-to-end flow of data. And ideally, you want that to be automated. So it's current, and any changes, update automatically on, your visualization of what your data lineage looks like. I've also seen organizations use the lineage first approach for BCBS 239. So a number of the GSIPs, declared compliance a few years ago, but we have seen incidents and issues where that has broken down. So people are still evolving how they prove data lineage for BCBS 239. And if people are not familiar with that regulation, I'd be surprised, but if you're a data person, but it is around risk data aggregation and risk reporting. So, it's extremely important to be able to understand how you aggregate your risk. And so data lineage really plays into that. Again, for financial crime purposes, I'm seeing organizations, visionary organizations, being able to map external regulation all the way up to the FATF recommendations and principles, but to local AML regulation, for example, into their KYC processes, and then through transformations all the way to the transaction monitoring processes. So anything you can do at the KYC stage to improve the control and the quality of data will automatically improve the outcomes around transaction monitoring and sanction screening. So, there are a number of examples that I'm seeing organizations take, but I can continue to be amazed at how some of our customers and even our prospects look to use data lineage to solve business problems. And, even my own example, cross-border data sharing. If you can map an external privacy regulation to your internal policies, and then to your internal entity structures, and then to your data categories, roles and responsibilities, your system inventory, it's extremely powerful to be able to automate the decision making on whether you can and cannot share data between different jurisdictions, or even for different purposes. So the roles and responsibilities, restrictions and permissions, that entitlement side of things. And that is something that a number of people, all organizations that I've worked at and I'm working with have got data sharing approval challenges, because the regulations are changing all the time, and to keep up with them, and to ensure that decisions that were made historically are still valid, you need to have a handle on how you can manage cross-border data sharing. So it's a very topical use case at the moment for us. We're working with a number of people trying to help them to solve that.
Okay, Lorraine, I think our time is up for today, which is a great shame because there's a lot to say about data lineage at the moment, but I'm sure we'll come back to it at another occasion. So thank you very, very much indeed for joining us. Always nice to talk to you, and
Thank you.
See you again live sometime soon.
Lovely. Thanks so much. Take care.
Thank you. Okay, next I'd like to welcome, it's run a 1-minute elevator pitch video from RegTech startup Apac. So off we go with that.
Good afternoon, everyone. In today's cumbersome compliance process, traditional manuals and paper-based knowledge are like the paper maps we used ages ago. They require someone to interpret and give you turn-by-turn instructions. Staying compliant is one of the main challenges for financial institutions. There's a compliance check behind everything a financial service provider does. So when the compliance runs smoother, financial institutions run better. As a global regulatory technology company, this is what Apac solves. Apac is like the GPS as we provide embedded, instant, and yes or no answers to regulatory questions when and where they are needed, fully integrated into financial institutions' existing infrastructure. That's why Apac offers the broadest coverage of regulatory answers on the market and allows its clients to choose their digital regulatory compliance content from some of our world's most prestigious law firms. To know more about our solution, you can visit our website, apac.com, or contact us directly at hello@apac.com. Thank you.
Okay, well, thank you for that. A little short break there. And moving on to our next panel, which is about digitizing onboarding KYC and AML with RegTech. The session is going to be moderated by Simon Young, and I'll introduce Simon, and then Simon can go on to introduce the panelists. So Simon Young is a fintech and RegTech enthusiast. He joined DBS Bank Hong Kong as head of compliance in June 2021, where he leads efforts to develop its RegTech roadmap in addition to many other compliance projects. Over the course of his 20 or so years career, Simon has held a number of senior leadership positions in compliance and financial crime compliance across financial services and fintech industries in Hong Kong and mainland China, including recently group head of financial crime risk management of Ping An Group, senior director of Tencent Financial Technology, and alternative chief executive of WeChat Pay Hong Kong. Didn't say that one very well. WeChat Pay Hong Kong. So he's also a member of ACAM's Hong Kong chapter. So Simon, over to you and the panel on digitizing onboarding KYC and AML with RegTech.
Thank you, Sarah. Welcome to our panel on digitizing onboarding KYC and AML with RegTech. Today, I have much pleasure to have three leading RegTech practitioners and innovators from HSBC, Mox Bank, and Know Your Customer, joining me to share insights into how RegTech is enabling innovation in the area of digital onboarding, KYC, and AML. I'll ask our expert speakers to introduce themselves in a moment, but first, here's how you can get involved in the discussion. If you would like to ask the expert any questions, we will take questions from the audience throughout the discussion. So please feel free to add yours to the box under the question tab. Now, I'd like to start by asking our panelists for a brief introduction about themselves and their firms. Shall we start with Lee, please?
Thank you, Simon. My name's Lee Ashmore. I'm the Global Head of Anti-Money Laundering IT and the Regional Head of Compliance IT in Asia Pacific for HSBC.
And Klaus, please. Thank you.
Hi, everybody. My name is Klaus Christensen, and I'm the CEO and co-founder of Know Your Customer. We founded the company in 2015, so we're around a bit, and we have our headquartered in Hong Kong, but we also have offices in Dublin, Singapore, London, and Shanghai. We are a vendor in this space and radically simplify, improve and digitize the KYC and AML compliance process for especially corporate customers, the onboarding of businesses and SMEs.
Thank you, Klaus. May I have Eric to introduce himself first?
Hey, hello everybody. This is Eric from Mox Bank. I'm the head of Hsbc in Mox Bank. So Mox Bank is a virtual bank in Hong Kong. So this is we are the first batch of the virtual bank launched in Hong Kong as well. So for myself, I have been in this industry for 15 years. Before I joined Mox, I was the regional lead of the digital project in RBWM market for Hsbc in HSBC.
Thank you, Eric. So let's start by looking at the current state of play around digitizing and automating KYC and AML processes. What have we achieved so far and what is still left to do? May I ask Eric to share a bit on this first?
Sure, maybe I can share more from the virtual banking perspective, what we have done so far on the onboarding pieces, especially. As you know, as a virtual bank, we cannot meet our customer. So basically our onboarding process is really based on the non-face-to-face channel. So for the non-face-to-face channel, definitely we will face the impersonation risk. This is a must. So we have to work with our vendor to provide a solution to how to mitigate that risk. So what we are doing right now is that we will make sure that the customer will take a copy of the Hong Kong ID in our app. And then we have a solutions in place to make sure that that Hong Kong ID is a general one. In this part, AI definitely has been deployed to make sure that everything is perfect. After that, we will also use the OCR technology to extract the information from the Hong Kong ID. And then we also have done some liveness check and also the similarity check between the Hong Kong ID photos against the image taken in the app as well. So all of this consider the machine learning and AI as well. But then, as you know, technology or tech is not always perfect. It's not never 100% correct. So we also implement some additional sampling check after we onboard the customer to make sure that everything is perfect in checking the impersonation risk. In case we find some issues, we will also feed it back to the vendor so that they can learn it again and also tune the parameters in that system. So this is something that we are working in Mox Bank right now.
Thank you, Eric, for sharing the virtual bank journey. May I now turn to Lee to share his view about the AML processes in HSBC?
Yeah, sure. So from an AML transaction monitoring perspective, well, we're actually looking at all kinds of different areas, to be honest with you. So if I start with the detection space, then we are looking at how we can better leverage AI machine learning to be able to identify financial crime that maybe traditional rules-based transaction monitoring systems are not able to identify easily. we're also looking in the post-detection space around how can we use AI machine learning to be able to, I guess, more easily identify the risk that is presented in the cases that are generated from TM systems. So, TM systems normally have quite a high false positive rate. I think the industry standard is anywhere between 95 to 98% false positives. So we're using AI machine learning to be able to look at the cases that are generated and identify those lower risk cases so that they can then be auto closed. We've had quite a lot of success in this, to be honest with you, with one solution that we put live on Google Cloud for Hong Kong a couple of months ago that has reduced the number of cases presented to operations by more than 50%. So quite a huge improvement there. We're also looking at in our insurance entity. So traditionally, because the volumes can be quite low, there's been a lot of manual kind of processes and manual transaction monitoring in this space. So we've been deploying automated systems, actually a tool called Hsbc, which is a RegTech company based in the UK that we partnered with, to be able to automate transaction monitoring for our insurance entity, and that's been very well received. So yeah, they're the main areas that we've been looking at right now in HSBC.
Great. Thanks, Lee, for sharing. Well, we may follow up with the questions. So since HSBC has, a number of jurisdictions in operations, would there be differences when you implement all these automatic AML processes?
So we try to standardize as much as we possibly can. So we like to have single global instances where possible. That's not always possible for reasons around data sharing, data privacy, etc. But when it comes to the analytical models, then we do this on a country by country basis. So for example, the post detection tool that I just mentioned, where we managed to reduce the cases in Hong Kong by over 50%. We have deployed this in other markets as well. And although the tool itself is the same and we deploy it on cloud, the model is specific for that market. So we go into this on a market by market basis. The same goes for the insurance monitoring solution as well. It's a single global instance, but the model will differ by market.
Right. Thank you very much, Lee, for sharing. Klaus, may I turn to you? I wonder if you can add your perspective in terms of what else can be done for corporate entities.
Absolutely. Actually, I'd like to go a level higher here. It's very interesting to hear from the both sides, Eric's sides on the onboarding and Lee's on transaction monitoring and AML there. My comment on the differences in countries is, though, just to get that out of the way, all the regulations that we're faced with are coming from the FATF original recommendations in the end. And so what we see is that the similarities are more than the differences, but the differences can be tricky. I agree there. Yeah. Well, overall, these are really exciting times. I agree. A lot has happened. Everything's coming together right now in many ways, and a lot has moved in the past few years in terms of digitizing these processes. Though I think we're still at the beginning. So what has moved is, or what are the influences there? First of all, customers are today so used to seamless digital mobile processes everywhere and in all areas of their lives. Consequently, and we heard that from Eric, RegTech as the technology enabling these experiences has become the secret sauce of virtual banks and other challengers. And traditional banks also look for RegTech for efficiencies and de-risking. Even the regulators are now encouraging the use of RegTech and are writing regulations no longer just for paper processes. All these are powerful shifts, and they explain how so much has happened. Why do I say we're still at the beginning? Well, the processes for onboarding and also, as we heard, of individuals, and also as we heard for transaction monitoring from Lee there, have moved a lot. But the onboarding and KYC AML corporates and SME is still terribly inefficient, just as an example, and manual almost everywhere. And what we also see is that a lot of the digitization is kind of on the surface. Yes, the information and documents are now exchanged and stored digitally, but often there isn't actually a lot of automation going on. Most of the process is still handled by teams just in front of screens instead of paper documents. And that would be something we are changing a lot. And if you think about the bigger picture, really, in the past 2 years, but not only that, we have moved as societies to digital everything and digital identities, electronic signatures, even fully digital contracts are something desperately needed in this new world. And the KYC and onboarding process is just an expression of that, and it ties in with all of it. That's from my vendor idea.
Thank you, Klaus. So with the increasingly rigorous regulatory requirements and the growing levels of data rising from digitization of banking services, lots of challenges and have emerged in fighting financial crime. And one of them is around data. So getting your data right, getting your data in order is critical for success when using RegTech. So why is it difficult to get right? And what are some of the common pitfalls you have seen, and what advice do you have for getting data strategy in order? Lee, any comments on that?
Yeah. Yeah, so data is kind of probably the #1 challenge, actually, in terms of compliance technology, because we are consumers of data. And often what we see is that data can come from many disparate systems. It can get transformed along the way, and it's not always clear what the data lineage is. So, for example, you may get a transaction come into a transaction monitoring system, but it's not always clear where that transaction first entered the banking system, and you know, what was the path that it took, and what changed with that data as it goes through the pipes, so to speak. So understanding the data lineage is key. And to go with that, you need to also make sure that you've got the right quality data. So compliance systems are garbage in, garbage out. And that's the same with AI machine learning. So, you know, nowadays we hear a lot of people talking about the power and the exciting kind of potential use cases of AI machine learning. But at the end of the day, if you don't get the quality of your data right, then please don't expect it to be a miracle worker, because actually you will be very disappointed in the results that you get. And actually with AI machine learning, you know, it exacerbates the poor quality data even more. That can lead to bias in the models. It can lead to the models giving you incorrect results. So, you know, data quality is critical. Making sure that your business understand their data, they understand that they own it, and that they are responsible for making sure that it's of the right quality going into the various systems. I think right now as well, what we're seeing is that with cloud technology and data lakes popping up in all kinds of organizations, we almost have too much data around. So it's making sure that you get the right data, and as I said, that it's the right quality and that you really understand the data lineage, which is key.
Thank you, Lee. From Klaus, from your perspective as a vendor, what have you been seeing from clients in terms of data?
Yeah, it would be very similar. Lee made very good points already there. Data silos, lineage is important, and integrating different sources can be really challenging. That's the part where we work a lot, obviously. But the most important point to me is it's the holistic view of a customer that we're seeking, a whole person, a family even, a business or a group of companies working together and their activities. It's not just data point, date of incorporation. Relationships between entities and persons matter here. And both traditional paper processes and even first generation digital systems with simple databases and file storage are not great at all at mapping relationships. And as to the challenges we see with our clients, they are often related to one of two things, either to how the data entered the lineage, how the data entered the digital realm, or in the inherent ambiguities of real people and our physical lives. An expression of the first would be the transfer of information from a form into a digital system. Forms are a way to try to make human input more precise, but we make mistakes, typos, switching first and last name, misunderstanding of what we have to enter into a field and so on. And that can, as Lee pointed out, cause a lot of problems downstream. An example of the inherent imprecisions of real people would be the matching of names to sanction an AML list. We all know about the manual work that is needed to sort out the false positives and in screening. Names are not exact and they're not unique, so they can't be used confidently as identifiers. There's no silver bullet really here. I'm afraid a knowledgeable team or an outside partner that is equally knowledgeable that know what they're doing here with the data is what you need. Normalization, categorization, graph databases, machine learning can all be used, but those are just tools.
Yeah, thanks, Klaus. I think you've just addressed one of the questions raised by the audience, whereby he mentioned about in-house data is complex, siloed, and uncategorized and hard to manage, which is making it very hard to take a digitized approach to KYC. Or in terms of that, is there anything to from your experience to supplement, say Eric or Lee?
Yeah, I do agree that data is a very crucial part if we want to do the machine learning or AI. So as a virtual bank, we don't have enough data like Hsbc because we have just launched for a year. So, but then we see the importance of the data. Apart from the quality of the data, the scope of the data is also essential for us. So maybe I can take the transaction monitoring as an example as well. Just want to supplement something more from what Ali previously mentioned. So right now, when we look at the transaction monitoring, basically, or usually we will just look at the transactional information or the custom profile to see whether alerts should be generated based on the parameters or the alerting conditions, blah, blah, blah. But then we also found that the digital footprint, the data like IP address or device ID or the IP location, etc., are also crucial for us to do the transaction monitoring. But this kind of digital footprint data are not the traditional data for transaction monitoring system. They are all more from the fraud perspective, fraud risk perspective. They will sit in the fraud system instead of the AML TM system. So the silo problem is something that we also need to handle or manage so that we can fit this kind of digital footprint data to the transaction monitoring system so that we can have a holistic view to generate some alerts based on the transactions as well as the customer behavior in the digital footprint as well as the customer profile to form an alert instead of just looking at the transactional data going forward.
Right. Thanks, Eric, for giving us, some insight in terms of transaction monitoring and what would have a virtual banks been doing in this area. Is there anything to add from Lee in terms of what Eric just mentioned?
Not a great deal. I mean, Eric's right. I think what we're seeing is that now with a shift to mobile banking, and that's something that COVID-19 has actually helped accelerate. It's a shift to digitalization. We have whole new kind of data sets available to us now, which are proving very useful. So as Eric mentioned, things like IP address, which traditionally was more related for fraud, we are finding good users for this in AML, TM as well. And I'm trying to think if there's anything else really in particular. I'm struggling to think. I mean, things like geolocation data as well. So, IP addresses, geolocation data, all the other kind of metadata that you can get hold of from various devices. Because at the end of the day, let's not forget that transaction monitoring is really about kind of trying to identify suspicious behavior based on the customer's profile, right? And suspicious doesn't mean illegal, right? So, not only is it an opportunity for companies to identify financial crime, but it's actually an opportunity to generate revenue as well. Because if you're seeing that your customer's behavior is different to what their KYC profile says it is, then maybe it's time to refresh your KYC profile, because that customer could have had massive growth, or something else could have happened, which is actually not suspicious. It's an opportunity to be able to kind of go and have another conversation with that customer and maybe improve the relationship with them. So that's something that we're seeing a lot of.
Yes, that's indeed. Yeah, a lot of a lot of opportunity could actually be getting out of various data mining techniques. So working in the banking industry for years, we all understand that we are unable to do everything by ourselves, especially in the digital era. Collaboration on innovation to support more efficient and effective financial crime risk management effort is trending and is indeed welcomed by the regulators. So what are the main consideration points when partnering up with RegTech? Klaus, can you share your experience with us?
Well, I would have some experience there because we've partnered with financial institutions a lot, like Eric's main company, for example, in Hong Kong. So we have a lot of experience there, and there are challenges, but there's also a lot of positives. But let me start with the positives. Why would you actually even do that? Partnering with younger RegTech firms can yield absolutely brilliant results. They are generally more innovative and can bring the latest technology to the financial institution. They move faster. So if you want to get to market, want to open something new, that's great. They're part of and more in tune often with younger generations and can bridge those digital worlds. And they can be surprisingly cost efficient. I can tell you a secret here. These companies don't know what they're worth really, and they have no idea what the established vendors charge you. But as to the challenges, of course there are. Most of them result in the huge cultural differences from a different time horizons, different responsibilities between financial institutions and tech companies. Just a couple there. Long-term project thinking in financial institutions compared to agile, iterative models in tech companies. That's one of the biggest differences. The agile model actually makes sense in a fast changing world of and customer-centric world, but a 150-year-old organizations with 10 management level might struggle a bit more with that. We've had our experience with explaining how we work and why that is a good idea in this area, and adapting ourselves to slightly longer release cycles, for example. Not everything actually has to be cut down into 5-day sprints if you work with a larger institution. But this is an area where the financial institutions should actually move more, and they are. I've seen this happening to ensure the success of any of these projects. And an area where the tech companies certainly need to catch up is in adapting to the responsibilities of a much larger financial institution. large number of stakeholders, risks of multi-billion-dollar fines or losses to shareholders, politically sensitive areas, all that, I'm afraid, move fast and break things doesn't quite cut it when a piece of software impacts legal responsibilities for millions of customers or tens of thousands of employees of a bank. So there has to be movement. And for that reason, it's often easier to work with slightly more mature, smaller players. Like the idea stage is not quite the right thing. If a product is there, it's easier. And in a related field, we often cited minimum viable product in agile terminology. In an application, financial institution is not all that minimal. It has to be, if it has to be useful for the financial institution, any product has to be very much full-featured and almost error-free. And we learned that very early on. And it stretches go-to-market plans, but that is something where the two have to get back together.
Yeah, right. Thank you, Klaus. From practitioner's perspective, do you have anything to supplement, Eric?
Yeah, maybe I can share some experience because we are from financial institutions. So basically, we are all from financial crime compliance background without tech background. So when we engage the tech vendor, they may not have the enough expertise in the FCC of an AML or transaction monitoring. They have excellent tech skills or machine learning or AI things in their company, but they may not understand fully the FCC. So I think the key thing is how to communicate well between these two parties. Maybe the BA can help, or maybe we should have some middleman to communicate the ping pong or the requirements. Because when the vendor builds something, it may not be exactly what we want from the financial crime compliance perspective. So we have to make sure the communications is we have a good communication between these two parties. I can feel that Klaus can definitely do this job. He is the tech expert and also the FCC expert as well. So basically, I think we should find something like that. Yeah.
Thanks. So in this regard, how can banks embrace this new reality and collaborate to maintain an efficient financial crime framework? What else do we need to see regulators do to facilitate digital optimization of KYC and AML CFT process and controls? Is there anything to share from Lee's perspective?
Yeah, sure. So I think here in Asia, we are quite fortunate that we do have some regulators like the HKMA and MAS who are actually quite forward thinking and quite open to use of technology. But I think from a financial crime perspective, one thing that we really need to see more of is the ability to share data amongst FIs. At the end of the day, in order to really fight financial crime, we all have to work together, right? So, no one bank is going to be able to solve the problem. We all need to be able to work together. And right now, that's not possible in many cases because of the restrictions that we have. I know that in Singapore, MAS there are actually pulling an initiative together called Cosmic, which is providing the ability to be able to share details of financial crime amongst banks, and that's something that we should see, elsewhere as well. I think there's other companies as well. Countries, like Denmark, I believe. But we should also encourage innovation. I think banks have a lot to do in order to be able to work together with regulators to be able to help them understand AI, machine learning, and cloud technology and how it can benefit them rather than it being a black box that they're scared of. Certainly within Hsbc, when we first started putting things to the cloud, the common perception was that, the regulator will never allow that because it's putting customer data onto cloud. Actually, what we've seen is quite the opposite. The regulators are very much open to this. The problem is more within the internal controls in the bank, around kind of sharing data and, cybersecurity. So as long as you can demonstrate that you have the right controls in place and that the data is safe, then generally the regulators are actually quite open to this.
Yes, this is about the change of mindset internally to sort of embrace technology, which is very important. So there's a lot going on and many new and emerging challenges to prepare for. To wrap up today's session, can I have one piece of advice from each of you for practitioners working in this space on how they can strengthen their response to AML and financial crime risk? Shall we start with Klaus first?
Sure. From my point of view, yes, embrace technology, but use it wisely. It's too simplistic to just replace staff with tech. And it might sound counterintuitive, but you can use technology to get closer to your customer and make your stuffs work more human. If you use tech to reduce compliance load on your customer, you can move to more interesting conversations with them. And if you use RegTech to free up your staff's time from repetitive, I'm talking about compliance stuff especially, from repetitive manual tasks, they can use their critical thinking facilities and their ability to connect the dots, and even to make the human connection with the customer. And that's where we want to go.
Thank you, Klaus. Eric?
Yeah, I think we have to break the old mindset if we want to do something different. Not just because for the efficiency, but of course we want to fight against the money mule or financial crime in Hong Kong. Especially for virtual bank, we have identified a lot of money mule activities, Doge accounts owned by the syndicate to do some deceptions or investment scam. This is very common in Hong Kong right now. So I do believe that the linking analysis, the machine learning could help us to fight against the financial crime.
Thank you, Eric. Lee, please.
Yeah, so the one piece of advice I'd give is think like a criminal. I think what we've seen is that they are incredibly innovative and they move quickly. As I said, COVID-19 has accelerated digitization. And with that, we've seen some really ingenious ways that criminals are moving money around, using new products and digital products that you look at it and you think, wow, how did they think of that? So, think like a criminal and think about, if I was wanting to move money around the world without being identified, how would I do it? That's the one piece of advice I can give.
Well, yeah, the world of financial crime is far-reaching and a long journey. So thank you very much today for the three speakers. That's the end of today's discussion. We look forward to seeing you all again in future.
Thank you very much
Simon.
indeed,
Thank you,
Simon,
thank you.
and the panel. A very, very interesting discussion. As Simon says, financial crime is a huge and escalating problem, and one that, as you mentioned, we need to work on together to try and tackle it. So thank you very much indeed for that. And coming to our next session, which is about I'm not too sure, but I should know anyway. Yes, I do know. Indeed, I do. Leverage RegTech to manage surveillance in the work from anywhere environments. Yep, we talked a little bit about that earlier, particularly COVID-19 and so on. So sorry for that. I lost the plot a bit there. Anyway, David Cowland will introduce this panel and moderate it. And if I can tell you a little bit about David's background, he is also a fintech fanatic. So David has spent more than 3 decades in financial services, covering retail, corporate, wealth and international banking and asset management in both business and technology roles. In recent times, he has run compliance technology, been head of client operations and run the RegTech initiative and a major financial services firm. David is passionate about change and innovation and is an avid commentator on RegTech and how it can transform compliance. So David, your task today is to moderate the panel and find out more about managing surveillance in the work from anywhere environment. So let me hand over to you.
Thank you, Sarah, and welcome to everybody and to our panel. Just before we get started, I'll just remind everybody to use the box on the right of the video to ask questions and to vote in the poll questions, please, as that will be useful. We'll try to get to those questions as we go through this. Also, this session is being run under Chatham House rules, please, so that would be great. Anyway, let me introduce the panel, and we have a great panel with us today. So Emily is the Global Head of Compliance Surveillance at Standard Chartered Bank. Prior to this, she was head of surveillance at JP Morgan in Apac, preceded by being the regional head of core compliance at ICAP. Welcome, Emily. Rob is the global regulatory lead for Relativity Trace. He has worked for the last 10 years as a senior compliance surveillance manager with UBS and Lloyds Banking Group. Previous to that, he spent just under 5 years with the FCA, the UK's primary conduct regulator, also in the supervision of monitoring space. Hi, Rob. And then we have Selena, is a senior solutions consultant at Smarsh, who has recently acquired Digital Reasoning. She has worked for both bank and vendor sides of fintech and has a passion for cutting edge technologies. Welcome all. Looking forward to hearing your answers to our questions. It should be a good session. We're going to open with a poll question first. So all of you out there, if you can start taking a look at this, what are the biggest surveillance and monitoring challenges your compliance teams are having to manage in today's working environment? Is it managing a more distributed monitoring and surveillance environment? Increased difficulty in monitoring the use of personal or unmonitored devices? Maintaining security and wider environment? Capturing and monitoring the right data from surveillance systems? Or identifying and resolving alerts? So if you can do that, and whilst you are voting, we'll jump straight into the questions. So what I would like to ask first is, as we're sort of reviewing the last year and the impact of extended remote working arrangements, what do you consider to be the top challenge for compliance teams managing surveillance and monitoring? Why don't we jump in with Emily first as the main practitioner here.
Thanks, David. Hi, everyone. Yeah, it's a really tough question. What's been the worst thing about COVID on surveillance programs? Because it's a pretty big choice. And I think if I have to boil it down to one core driver, it's just been the scale. So mostly the volume of alerts, but it's been compounded by so many other attributes. So working from home in an environment where we're used to being able to access each other meant that resourcing that change in volume became very difficult, whether it was hiring or onboarding and training people. So volumes went up, but then we didn't have the ability to deal with them very well. The same team were also put under pressure working remotely to do all of the kind of troubleshooting they would normally do to deal with an immediate backlog. And I'm sure all of the practitioners on the panel remember that literally within weeks of people going to work from home, we went up sort of 200, 300% in some cases in our volumes across whole programs. Interestingly, in comms, that has not gone away. So the whole scale of the program has shifted over the last 12 months and has had to be capacitized accordingly. So I think I would bring it down to volumes, but the working remotely and having to adjust to that really compounded our ability to deal with it. I think what I would call out, though, is what's gone well. And I think it's worth remembering some of the opportunities to learn from these crises, particularly a long crisis like this. And that has been that surveillance, compared to, I think, a lot of other areas of financial services, has been able to work remotely and adapt to that remote working. Our focus on technology, our dependency on teams that have always been to a large extent offshored or have had to work on a follow the sun model has meant that we've been able to adjust. It took a little bit of time, but we've been able to adjust. And I think actually a longer term plan of working remotely and working wherever there's the appropriate talent actually has probably put us in good stead going forward for all the changes that are coming.
That's really interesting, yeah, and I think we're hearing that a lot. Selena, I see you nodding. So, did you have similar views, thoughts?
Yeah, definitely. With the volume of data, it's increasingly an issue to close down all those alerts. But more importantly, there's also that risk of actually missing a lot of those transgressions within that, because you're just inundated with so many alerts that people, there's a human element of when you're looking at the alerts, you might end up missing something just because you're completely inundated with the volume. But from more of a technology point of view, we're also looking at just having to actually have these new technologies that you need to start capturing and monitoring. So within the last couple of years, the use of Microsoft Teams or Zoom and so forth has been a lot more prevalent. And as a result, the compliance teams themselves need to actually have that data in order to monitor it in the first place. So having to capture that information, monitor it, and then deal with a whole different communications medium. Also mentioning that there's other technologies such as WhatsApp and WeChat that people want to use, especially on an unmonitored basis. But if you can have the kind of practices in place that can say you can still use WhatsApp because we are still able to capture it and monitor it, then it doesn't have too much of a break in the flow of how they want to communicate.
Interesting. Rob, what do you think?
Yeah, thanks. And first of all, thank you very much for inviting me to participate today. I think two strong answers there, and I think that's absolutely what's been echoed by our own experience, mine, and also the clients that we deal with. Those different channels which Selena alluded to, most of our clients have had some challenges, as many of them, or some of them at least, were not necessarily within the mandate of monitoring before everyone went into this working from home scenario. I think the activities are now a more permanent arrangement, and therefore we need to ensure that the relevant activities are sort of presently and future-proofed with considerations accordingly. As a vendor, we've recognised that and sought to try and integrate some of that case management tool into our monitoring to support those surveillance teams in managing that disparate workflow from different channels. I'd also say, and I guess looking back at your poll questions, the second point as well, we're additionally hearing from clients about activity not undertaken not on recorded lines or on personal devices with generally larger numbers of people working from different locations. I think it's fair to say that's a challenge that most of the clients have experienced, but not much more to add on top of those strong answers.
This is good because these are the questions that we have coming up, especially around the number of alerts, and hybrid working seems to be here to stay. So before we jump into that next question, I think we're going to see the results come up. So Selena, what do you think here? We seem to have like two that are at the top.
Yep. I mean, they make sense entirely. So managing distributed monitoring, of course, you're going to have data from lots of different locations. You need to aggregate them and thoughtfully actually use them for your investigations. Security, especially with everything coming to the cloud, using things like Teams, SharePoint, etc., and especially within Apac, where the banks in the region haven't necessarily been as prepared for cloud technologies. The importance of information security, having something that is looking after your sensitive information, and I guess it's down to those policies and best practices of how to handle that confidential information if you are using SaaS environments for your surveillance or for capturing that data that's being stored in the cloud, ensuring that all of the checks and balances are in place to protect that. It all makes sense.
Yeah, it's interesting that the numbers are sort of quite close. And as we were talking about, as your answers were coming out in terms of, resolving the number of alerts, not that much lower, than maintaining the security in the wider environment and the unmonitored devices. Interesting. Lots on people's minds, clearly. So let's jump into some of the questions because they are appropriate. So we're going to come to Rob, I think, and the question here around, more remote working and hybrid models coming into play. How do you think we're going to adapt the current approaches to managing surveillance to meet those challenges?
Thanks. Yeah, the key concern here is when employees, particularly in financial services, the front office folks, there's generally an embargo which prohibits personal mobile devices being used at the trading desk. They're required to be out of sight generally, and this can be reasonably well policed with compliance advisory colleagues and other colleagues who are usually located close by and in the trading rooms. And clearly this can't happen when working from home or alternative contingency locations. It's all too easy to pick up your personal mobile, and more importantly, the control or any oversight from others can't really be managed effectively. And what we've seen is firms rolling out policies, the sort of rules of the road, which require attestation to confirm compliance. We're aware that firms have experienced challenges covering those newer communications that we've just mentioned, Teams, Zoom, WebEx, etc. And many of these may not have been covered by pre-existing monitoring arrangements, and consequently policies have been hastily drawn up, which require dialing into meetings on a recorded line so that recording and monitoring is complete. Policy really, though, isn't a control per se, and if a breach were identified, then we've seen some serious consequences. It was autumn last year, I think Morgan Stanley dismissed a couple of senior front office executives for using WhatsApp when policy clearly prohibited it. there wasn't much of a hint that the content had even been reviewed or that there was anything nefarious inside it. It was just the policy prevented usage, and they should have been aware, and therefore there was consequences of their breach. And from the regulators, we've been reminded by the FCA around obligations of recording and monitoring in their Market Watch articles. The SEC fined folks, I think, in December 2020 for non-recording of business use on personal devices. And the Monetary Authority of Singapore also produced some guidance on recording of devices related to business activity. From a vendor perspective, we identified this and have some solutions in place to capture these channels and many others besides to ensure completeness. But I think that's a key issue.
Yeah, the pandemic has shaken the entire system, right? And it really is sort of presenting those kind of challenges to everybody. And Emily, you're living it at the front end. What do you think? How are we going to adapt?
Rob's exactly right. There is a strong technology component to this, and deciding what is a monitored channel and then making sure that you can cost effectively and time efficiently plug it in and capture the relevant data to perform surveillance is something that I think we can probably, as an industry, agree could get better. And particularly the speed. I mean, the speed of deployment of some of these new channels over the last 18 months has been so much faster than we've been used to as an industry, and therefore not being able to plug those systems in for retention and surveillance activity has really had an impact on business efficiency. So I think if we can have better answers to that to keep the business running as they need to, that would be great. I think the other thing is there's a real discussion around what's the purpose of surveillance, because it isn't policy adherence. It's a detective control in most institutions to find where nefarious activity has actually taken place or potentially taken place. And so I think looking at technology to create blockers and perhaps look for policy breaches in a way that's complementary to allow surveillance to then focus on what surveillance is supposed to do, which is detection of those higher risk activities.
Cool, thank you. Selena, anything to add to that?
Yeah, I just wanted to say in terms of once you actually get that data ingested and able to look at across it, it's a different kind of approach to what you're looking for, considering you can't actually monitor people in person. You need to kind of be a bit more nuanced in the kinds of things you're looking for. So suspicious activities maybe based more on the behaviors as opposed to looking for just keywords of someone trying to manipulate markets or whatnot, because you're now kind of trying to look at, and I guess this leads into a later question about holistic surveillance, but you're looking at it across the board instead of just looking at those individual messages, but you're looking at trends and what people are doing across these different channels and how they're communicating across it. And also just wanted to mention the quality of data. We have an opportunity now where we're capturing new data systems. We don't want to take that straight from an archive, which has been kind of the old school systems, but you have an opportunity to get something in place properly to start with, to start monitoring from high quality areas that can help things with, say, voice surveillance in future, where instead of monitoring the desk phones, you need to start monitoring people's mobile phones and WhatsApp calls through their phones, etc., which is a completely different technology stack. But having that high quality data so that when you do the transcriptions, when you do the spotting or whatever technologies you use, it is actually useful.
Yeah, changes in the mediums that are being used, changes in the way that we are doing our work, new ways of working, all offering up challenges to us. There's a question coming, which comes in nicely with the third question, actually. So the third question, I'm going to pitch it to you first, Selena, is what insights and examples can you share on how firms have implemented and ensuring that strong monitoring and surveillance functions are in place? How has RegTech phenomenon affected our space? But the question from the audience is also about, in terms of having the policies, how do we go about embedding a good culture to encourage that good behaviour rather than reckless behaviour? So it's kind of a bit of a wrap up, and there's quite a lot there. But yeah, what can you say to that, Selena?
A lot of the customers and people that we've dealt with have been given the directive of doing more with less. So it's not necessarily a case of we need to put in these new technologies, etc., and these false positive reduction strategies so that we can just get rid of staff, but how do we actually expand our remit to new departments and new areas? So it's quite cool to see that AI technologies or whichever technology is being used, while there is more data being ingested, if you use it in the right way, you can still allow your business to expand and actually cover those new regions that you weren't able to before. With intelligent risk detection, like machine learning and so forth, we're seeing the actual compliance analysts are becoming more skilled. So instead of having, thousands of people in a lower labor country just closing down false positives, and that's their sole job, is to actually shift that to having compliance analysts that spend more time looking at longer investigations with more information, more data points, more aggregated information, and also kind of moving towards the cloud and so forth. Having lower total cost of ownerships, being able to see new features and whatnot coming out quickly, and greater security and so forth, and being able to ingest a lot of that cloud technology straight away, as opposed to having to wait for hardware that could take 6 months to arrive and so forth. So kind of the technology focus has been quite strong, but in a way that you are still encouraging people and the compliance teams to do more, without necessarily just saying it's a cost-cutting exercise.
Yeah, interesting. Rob, from your perspective on that point, I mean, you've been at the FCA and I know big push on good culture. Any sort of any thoughts on that, or focus on that point maybe?
Sure. I think just from a regulatory perspective, there's been a notable uptick in the challenge, both with regards to reporting and oversight felt internally on a surveillance team. Increased prioritisation of things like model validation, which require the surveillance models to actually be ratified to actually demonstrate that they do what they say they do, in conjunction with the sort of a heightened internal audit. That agenda seems to always be targeting surveillance operations, and there's always likely to be some areas which appear to require some improvement, it would seem. I think regulators themselves have upped their game when it comes to exams and inspections, with more information gathering ahead and more intrusive dives into the detail, then requests for information with tight turnarounds during visits and exams. That's something which I've seen and experienced on both sides. I think the policy question is a tricky one, and adherence from a conduct perspective. I think what we're seeing in that regard is the attestation to policy in order to demonstrate that everyone understands what they're signing up to, and those breaches, if there are them, are enforced properly. Is a difficult one, and I think that you could argue whether that's a genuine measure of good conduct, but nevertheless, from a regulatory perspective, you need all of those calls to be included and recorded and monitored, and therefore everyone needs to attest and comply. Just on going back to the sort of RegTech piece, I think that there's a lot more that's done with regards to automation in terms of reporting, a rollout of robotics, which is kind of more resource-saving type technology, information gathering technology, which might not be sort of hugely cutting edge, but actually does save folks quite a lot of time and effort to gather the right data together before some monitoring is undertaken across it. I think that's been a big agenda item in the RegTech improvement space. Selena mentioned AI, and I certainly see customers seeking to improve the effectiveness of their present solutions with that. And I think that we have seen some progress, in particular around voice monitoring more recently, enhancements in voice to text accuracy, capabilities, translation, language detection. I think generally the voice data is becoming much more reliable and to a standard that can start to be used effectively for automated surveillance, which I think is probably a first.
Right. Well, there's lots of points there, Emily. I mean, we could come to you last, and insights and examples from you. It would be great to hear about, Selena's point, doing more with less. Are you getting pressured in that space? And then, of course, are you really seeing the good culture being put in place as obviously as in a big organisation like Standard Chartered, all on your shoulders, it seems.
I'm not going to take responsibility for that one, no. No, I think if I look at where a lot of the impact comes from, it's very grassroots, and Rob just touched on it. It's the quality of the data drives so much of this. RegTech plays a really critical role, and it is constantly improving. But in the absence of good data, it really doesn't matter how good your technology is. You can have the best AI in the world, and if you don't know what trader executed what trade, you don't know anything. So I think the investment that the entire industry has made in data, I think the focus of the regulators on data, and that's ever expanding kind of remit that we see, means that surveillance can improve. And then the RegTech is the next layer on that. And Selena, I think, mentioned also the way that surveillance officers are approaching this. And 10 years in this space, and I think what we were all doing, 10 years ago in surveillance was much more spreadsheet based and eyeballing things and on a sample basis. And if I look at what we can do now, just in terms of the scope we can cover, leveraging those tools and that much better data. But we've also got surveillance analysts who are used to looking at all different types of data sets to look for those potential risks and joining dots and taking a much more investigative approach. And so I think that we're on clearly on a path and it's improving, but I would always come back to the data first. That's where I'm seeing the biggest impact on both bringing down volumes and improving the conversion rates to find the risks.
So that's an interesting point, Emily. So do you think we're moving towards a holistic approach to surveillance? I mean, what does that even mean, holistic approach to surveillance? What's your thoughts on that?
Well, I think there is probably a nirvana out there of what fully integrated holistic surveillance looks like. But if we come back to where we are now, and again, that's that journey, I would go back to the data. At the moment, the data is improving and a lot of people are running on improved trade data, improved e-com data, voice com data, and they're all still quite siloed and separate. You might have a single analyst looking across all of those. But the integration of all those data sets and the tying together on base nexus points and integrated databasing hasn't really happened in most institutions. And in fact, I don't even think the industry is thinking about some of those things. If I go looking for the tools that do it, there's still potentially a gap in the market. So yes, I think we can get to holistic, but it's going to be driven from the data, which and how the technology supports that before you then get, I think, the mindset of teams who can construct surveillance around that integrated data set and to start to pull out probably a much more focused, fine-grained approach to risk detection.
Yeah, and I suppose no one said it was going to be easy. Data is a key point, and as we talked about, all the different mediums. I mean, Rob, what are you seeing across industry? You know, are people talking about holistic surveillance, or are they just heads down, just trying to deal with surveillance?
Yeah, it's a great question, and I think one that we're going to wrestle with for a while yet. I think just to sort of summarise and completely agree with Emily's perspectives there, if I break it, monitoring down of anything, communications, trade surveillance or other, the three basic components are data, engine, people. Everyone's emphasised how important data is, and I think that is absolutely correct. The accuracy and completeness cannot be underestimated. The engine needs to be reliable and robust and potentially be able to incorporate other technologies as we move forward. And we mustn't forget people, good people in the loop, particularly when reviewing communications, as no one's going to explicitly say they are looking to abuse the market. There'll be subtleties, inference, allusion to other things, technical jargon, slang, colloquialisms, code words even. So we need a decent set of people, and the technology does have some limitations. Having said that, I think that we've talked about different definitions of holistic. I think Relativity Trace, for instance, is a communication surveillance platform to detect misconduct or non-compliant behaviour, but also that ability to integrate that with other systems, advocating that broader overview where these alerts can be viewed in conjunction with others in an overarching supervisory tool with alerts from other areas. So, for example, failure to complete compliance training, out of office working hours, PAD breaches, HR conduct issues, etc. I think these could pinpoint suspicions of a rogue trader type activity, which might otherwise have been missed if each alert is looked at in isolation. I think we see this is where firms are seeking to head just generally, and we see some progress, absolutely, but a little more perhaps is required in that area. It's not also, I would say, and this may be a bit of a cheeky observation, but I think assisted in some firms by their organisational structure, where surveillance teams, for instance, and conduct teams may operate in completely different parts of the bank. And I think if they could be brought closer together, then you end up with more efficient results.
Cool. Selena, any final thoughts on that question, those questions?
Yep, I mean, totally agree with Emily and Rob. The only things I'd add is that we are actually, I mean, holistic is a funny word, because I think about 6 years ago, if you said the word holistic, people would laugh at you. Then it changed to integrated, and then it was back to holistic, and who knows, whatever the buzzword is for bringing data together. But whatever the case, everyone knows this is the best way forward whenever you can do it. And it's the typical garbage in, garbage out. You need that quality of data, as Emily said. But it's also that we've seen some solutions nowadays that might be able to bring communications together, like voice, e-coms, chats and emails. because the way that people speak and their behaviors can kind of start to merge together, as opposed to having a separate voice solution, separate e-com solution. Not so much within the trade surveillance side. The kind of stuff that we've come across has been, if you're trying to do all of them at the same time in one platform, you're probably not doing any of them that well, because you have the expertise of working on each trade surveillance. You know, people have been doing that for 20, 30 years and having that expertise to find that alerting and whatnot. And as Rob said, it's actually bringing those alerts in. So you use that expertise from those other solutions into one place where you can then actually start making sense of that data, whether it's reporting or, in an ideal world, having, you know, those Uber alerts where you can then say, you know, if there are alerting happening within a trade capacity, then with a voice capacity and a chat capacity, and someone's just logged out of the building, and putting all that, you know, metadata information as well as everything else together, then you can have something super rich. But you need to have the data to say that all of this happened with the same person, and that actually, sadly, in itself is very difficult to do.
Definitely. So down to the last couple of questions as we run the clock down, and a big one. So we need to get quite focused on this one because we could be here for like an hour. False positives, massive problem, takes up a lot of time and resources. We've got the new techniques of AI and machine learning coming in to help us. I think we're talking about what are the implications on compliance teams and considerations that senior management need to keep in mind when setting up these systems. So let's, so quite broad, but let's try and keep it focused. If we come to Selena first, if you can maybe talk to us a little bit about the techniques and what people are actually doing.
Yeah, sure. I mean, I can literally talk about this one topic for 2-3 hours, do workshops, and it's a really fun topic to talk about. Yeah. As a first point, we need to move away from having, as mentioned before, these huge teams just doing this tick box exercise of closing false positives, because they're looking at so many nonsense messages and noise in the first place. If we can start having intelligent alerts that focus, so that your compliance analysts can actually work on alerts that are meaningful in the first place, you're not wasting that time, both in terms of the analyst time themselves and also time to actually close down on alerts from start to finish. Again, being able to do more with less. If you can reduce those false positives, you can then analyze new departments, new teams, new use cases. You can use similar technologies to look for not just market misconduct, but looking at, you know, high pressure sales and mis-selling, suitability complaints and whatnot within the organization. Artificial intelligence itself is a massive buzzword, especially working for a company that's been doing, you know, NLP and in-depth AI with you know, doctors and people writing books, etc., on the matter for the last 20 years. We've seen a lot of other vendors pop up in the last 2-3 years saying that, you know, we do AI, when really it's robotic process automation or just really fancy rules. So it's also to know when's applicable to use them, whether it's actually AI or it's all smoking mirrors and whatnot, can be quite difficult to explain, and quite difficult for banks and whatnot to actually know what they're going in for. We've also seen lots of different maturity levels in the kind of institutions that we've worked with. Some of them don't need AI. They just need, you know, some intelligent keywords, spotting, some robotic process automation in there, and it works for what they're looking at. If you're looking at the larger institutions that are having thousands and thousands of alerts just for one use case per day, then maybe you do need to start looking at false positive reduction, getting rid of, you know, newsletters and disclaimers, and having those intelligent messages come up and alerts come up in the first place. And also not just using AI for the sake of it. We come across so many RFPs or talking to customers where they're saying, oh, can you find things like sarcasm in telephone calls? And I mean, yes, we can probably do the research and pick that up, but if you try and train someone looking at sarcasm in England versus someone in America, you're going to get very different results. You're going to need to tune that and whatnot. So it's very powerful, but needs to be used correctly and understood properly, because it can be quite black box.
Cool. Excellent. And Emily, for practitioners, the implications on compliance teams?
Yeah, I'll keep it short. I think two big implications. One is that we all have to become far more technically savvy. I now have a team of people with data backgrounds, analytics backgrounds, and people who understand AI and can actually go through a model testing process. And that's been critical for us deploying some of these tools. I think the second thing is everyone focuses on false positive reduction. we actually need to remember as practitioners to focus on positive protection. So those positive hits cannot be lost in this quest to reduce the false positives. And it's interesting, we've had to run a lot of hybrid models to make sure that we really protect those, because the AI doesn't automatically get everything you're used to getting in the old systems. So, and then there's a lot of tuning and process around that. So they're my two pieces from a practitioner's perspective.
Cool, thank you, Emily. And Rob, finally, how would you wrap up this question for us?
I'll try and distill just a couple of things that spring to mind. I think the approach that I would be very keen to advocate is support the client's mission objective. What risks are they seeking to monitor? And I think it's all too easy to get lost in too many out there. So what specifically are we looking for? There's loads of material in terms of out-of-the-box policies and models covering all main taxonomies. But I think it's true to say that tight lexicon-driven alerts specifically directed at relevant risks, broken down, complemented by the client's own perhaps lexicon, would probably do a good job in many cases. The scope and population of who is being monitored also needs consideration. Financial services generally front office and client facing, but targeted searches are much more effective, so worth considering the risk in conjunction with the in-scope population. Some of the AI that's been leveraged that I think are good examples of reducing noise by being able to identify and remove spam, newsletters, confidentiality footers, duplicative emails within a thread so you don't alert more than once on the same mail for e-coms or in large conference calls for voice comms has been a big sort of winner, and our clients have liked that. Further use of sort of conceptual searching, so code words or out of context terms, I think is the way that we might look to make a material and effective input into the false positive reduction. Just lastly, I just suggest that certain phrases are always going to be required to be included within lexicons and can't be removed because no one really wants to see that happen. So we do need to apply some filters and be clever and knowing when those alerts are actually going to be required to be identified. And the reviewer's conclusions are critical to continuously learn that virtuous circle of really what is suspicious. To try and combine all that in a last sentence, that super robust testing of all of these processes is crucial to gain the benefit that you have, and possibly more importantly, demonstrate that and evidence that the relevant risks are covered, because we will be challenged by the regulator, auditor, etc.
That's great. Thank you, Rob. I think we're just out of time. I'll need to hand back to Sarah. Thank you guys for a very interesting panel. I think we could just carry on going as we always do on these, and I speak to Sarah a lot. We could just sort of run this for an hour and a half and we probably wouldn't even get there then. Really enjoyed talking to you, and thank you very much. And I'll hand back to Sarah.
Thank you indeed, David. Thank you very much indeed to the panel. Surveillance and work from home days, a whole different environment that suddenly popped up and has raised a lot of questions, many of which you've talked to today. So thank you very much indeed for that. So now we come to our final keynote of today's event, and it questions why are market data strategies outdated. Presenting the keynote is John Mason. John is currently Group Head of Pricing and Reference Data at the London Stock Exchange Group. And prior to that, he ran enterprise solutions in Europe for Bloomberg. And previously, he's held senior positions in technology companies supporting market data and data management for financial markets. So, John, welcome. I'm not seeing John at this very moment. Let's hang on for him. Okay, let's just give him a couple of moments. Right, I see him signing in, so that's great. So as I say, John has a long history in this area of capital markets technology, and he's going to share with us on the question of why are market data strategies outdated. So John, perhaps you'd like to get started on your keynote, and then we'll come to some audience questions when you finish that.
Will do, so. Let me just check first and foremost that you can hear me all okay, see me all okay.
Yeah, that's great. Yeah,
it's one of those huge ironies, isn't it, that we've all been at home for 2 years, where our tech has been fantastic, and as soon as we've started to come back into back into offices, our tech has started to let us down. So I thought I'd just double check. But lovely to see you.
Lovely to see you too. Great to see you.
And good morning, good afternoon, good evening to all of those who are on the webinar. Grateful, immensely grateful actually to have this opportunity to speak with regards to this RegTech Summit and thoughts and views around where perhaps the industry is going and where perhaps COVID and the pandemic has had an impact on our industry. So I think if we just go to the first slide, and I won't be the first speaker, and I certainly won't be the last speaker to highlight that the pandemic had an enormous impact on our ways of working, the views, the solutions that we looked at as to how we go about those ways of working. Most significantly of which, of course, is everyone found out that they could do a lot of their jobs, certainly in financial services, from home. They could do them remotely. They didn't need to be in physical offices. And therefore, that led people to think about, well, how does that work with regard to market data licenses, particularly where people logging in through desktops as was, that would have been sat in offices, but now they needed to be at home. And what did that mean from a licensing strategy perspective? What did that mean from a data management perspective? How could people manage that data successfully whilst being able to log in remotely? Where were the data sets held? Were they held centrally, where people could access that data in the cloud, or were they held at data centers? Did people need to keep staff physically in the office in data centers so that they could run their internal data management processes, or were they using and leveraging the cloud, which meant they didn't have to have those staff in the offices on a permanent basis? I know certainly ourselves with our own data centers. I know friends and colleagues that work in some of the major investment banks have all had teams in every day over the course of the pandemic because they had to keep the data center running. So people, I think, have started to look at the pandemic and say, well, how does that affect our ways of working? And are those effects permanent or temporary? And I think that takes us on to the next slide, really, which is, have we reached this point of no return? Have we said, actually, the pandemic has caused us to rethink our working practices in such fundamental ways, we wouldn't want to go back to the old practices, that there's no mileage in adopting the way that we used to work. And what we should be doing is very much looking forward and understanding how do we want to work and what are the opportunities perhaps that the pandemic has highlighted, and what are the challenges to getting to that state. And I think it's understanding, has the pandemic accelerated some of that thinking? Has it driven brand new thinking, or will we just revert to what we did before? And ultimately, in a couple of years' time, it would have been as if there were no changes in our working practices, no changes in our philosophies as to how we go about the practice of managing market data. Now, for me, I think we've reached this point of no return. I think the industry is going to move forward. And I think there are other industries that provide a precedent for that. And if we move on to the next slide, I'm a great believer in looking at other industries. Can we learn from them? Are there parallels, corollaries that we can understand? And so for me, I look at things like the music industry, I look at the film industry. And the reason I look at those is I regard those in their base form as licensable data. There's a copyright over songs, there's a copyright over films, there's a licensing as to the nature of the screen in which the film, is it NTSF, is it PAL, and all of those sorts of things that we have within those industries. So we basically have licensable data. And if I look at where those industries came from, particularly when they digitized, and I think that's the critical thing for me, is for a long time, music and film was analog. It was records, it was tapes, it was video cassettes. Then it started to digitize through the use of the CD. And as soon as you started to get digital versions of film and music, it seemed to very quickly accelerate into putting that data up onto the web, and moving from what I would call a data to process paradigm to a process to data paradigm. And I think this is where we are as a market data industry, is we are in this point of no return, this inflection point where we are currently today a data to process paradigm. We move data to where the process needs it. We as a data vendor ship files to our clients. Those clients ingest those files in physical format. They have file handlers to work with that data and to work with those files. They then put that data into data models. They perhaps move that data downstream from those EDM platforms to other databases that sit beneath applications, and ultimately the process that needs that data does the work on the data. So we've moved that data to the process. And the example I use here is very much what we did. I say we because I'm of a certain age. What we did in the 80s, if I wanted a cassette deck for my car and I wanted to play 10 specific songs that I wanted to listen to in the car, those songs might exist on LP, they might exist on CD, they might exist on another tape, they existed in physical formats. For our industry today, you could read bulk file, API, you could read XML, you could read CSV, STP, SFTP, FTP, physically different ways in which the data is stored. I'd have to have what I would call feed handlers. So I'd have to have a record player, a CD, or a cassette deck, something that could actually handle that physical data format. And then I'd have to put a lot of work and effort into actually compiling that CD or that tape for my car with the 10 tracks that I specifically wanted to listen. My process, of course, being I wanted to listen to music in my car. I had to then move that data to that process, having the infrastructure and having the time and the cost to do it. That's where we are today as an industry. We move data to process. This causes issues around tracking of lineage. It causes issues around entitlement. And from a client perspective, it causes issues of duplication. Am I buying the same data multiple times, even though I don't use it multiple times? And then we roll forward and we look at where the industry, the music industry has got to today with tools like Spotify, where the film industry has got to with products such as Netflix and so on. And that's what I would call process to data. We're no longer downloading data, not even digital data to an MP3 player. We're no longer downloading data. We're accessing that data in the cloud from a car, a tablet, a phone, a laptop, anything that has the software capability to access that data can bring that process to the data. And I have now the concept of a playlist, and I can create a logical collection of data. I don't have to make that collection physical in the same way I used to, or the same way I do today in the market data space. I can create a logical collection of data, and I can then listen to my music in the car by having that process to data paradigm. And that is where I think we're going as an industry. And I think the pandemic has accelerated a lot of the thinking in people's minds, in our clients' minds, as to how they can get to that model, because it facilitates single storage of data, it facilitates remote access to data, it becomes location agnostic to a certain extent as to where my staff are sat in order to access that data and process it. So if we then look at those next slides, this is where we are today. Clients dress data and make it fit for purpose. That data goes through any number of processes. It needs to be ingested, databased, tagged, it needs to be correlated, it needs to be cleansed, it needs to be enriched, and that all costs. That all costs our clients time, effort, and money. In a world where we're trying to lower TCO, we're trying to lower the total cost of ownership of not just the license component of the data, but the actual cost of getting the data to that point of processing. And that is a model that I think is going to change. It's a model we're at Refinitiv and LSEG driving to change. So if I look now at the next slide, and that's very much where do I think we will be, that's very much those processes, and I apologize for the very small text in this slide, but basically what we have here is data at the middle, processes rolling out, and business processes being the leaves on the on the outermost side of the circle. Those processes directly interacting with that data in the cloud. So displaying that data through a single logical model. So irrespective of whether you're looking at reference data, ESG data, fundamentals, estimates, whatever the data may be, a common, consistent, logical way of looking at that data, and the ability to create logical collections of that data that fit your particular business process, be it an OMS, be it a risk management system, be it a settlement, or be it a clearing system, rather than the very siloed sort of product deliveries that we as an industry have today. So that is where I think the industry is going. There are challenges to that, of course. We know that reference data and we know that market data is highly integrated across organizations. So it's not going to happen overnight. We have to support dual paradigms. We have to support the ability of moving data to a process, and we have to support the ability for processes to come to the data. But I think the rewards for us as an industry are going to therefore be similar to the rewards that we've seen in the music and the film industry. Greater consumer satisfaction, better consumer experience, the ability to source the data that specifically you want, rather than, the example I would use there is buy the album and you're only really interested in one song, but you still had to buy the album to get it. Whereas, do you really need that bulk file of everything, or do you want to just concentrate specifically on a subset? So I think the benefits of moving to this architecture as an industry, this as a service industry, I think are manifest. I'm conscious of time, Sarah, and I've probably waffled on for too long as usual, so my apologies for that. But I think those are the areas that I think that the pandemic has accelerated and can make us think about more as an industry.
Thank you, John. No, we do have a little bit of time for some audience questions, so let me put a few of those to you. And the first one is sort of runs on from what exactly you've been talking about. It asks, what challenges will firms face as they try to introduce these new architectures, obviously of taking process to data?
So I think those challenges will sit in a number of areas. First challenge will be, it's perhaps a different model. It's a different architecture. So it will be conveying to senior management, senior leadership in organizations that this is where an organization should go, and the benefits that will accrue, such as, if I look at it from our client side, lower TCO, perhaps less duplication of data within an organization, single sourcing of data, as in having data once, so therefore less reconciling of data across silos within an organization, and so on. So I think those are the benefits, but it will take some selling, because it's a different way of working to what we've had in the past. So that's going to be the first challenge, is getting senior leadership, senior management to buy into the approach. The second one, I touched on that a bit earlier, really, I think, is the actual mitigating and managing the risk of migrating systems to a new paradigm. So whereas an application may be used to taking in a flat file, ingesting it through a feed handler, putting it into a database, what if that application now just makes a direct API call to the cloud, gets that price back, gets that piece of reference data back to process a back office settlement, whatever it might happen to be from a use case perspective? That's going to take time to change. So I think it's going to be two major challenges I see is getting the support and getting the leadership to actually drive to these changes, and then actually making sure as we migrate applications, the risk is managed.
Okay, and I'll follow up on that one, John. Do you think certain sectors will move more quickly than others? Is it easier in some areas, or is there more sort of insightfulness into these kinds of things in some areas?
I think certain sectors will move more quickly, and that's probably a function of legacy and integration. I think the buy side, for example, hedge funds, asset managers, and the like, who perhaps have more of a service model anyway. They're used to dealing with fund administrators, custodians, and don't really want to own a technology stack or the internal infrastructure, and perhaps even the internal technology team that goes with processing data internally and managing data internally, I think they will be quicker to perhaps adopt these sort of as a service process to data type of models than, let's say, a tier one investment bank that's got X hundreds of internal applications that are all integrated into their internally built security master. So when you start thinking about a security master in the cloud and accessing that directly, I think you will see certain sectors within the industry moving at different speeds because of either appetite for service models, but also less legacy to transition.
Okay, thank you very much indeed. I think we have time for one more audience question. And this is a broad one, so we need a short answer to a very broad question.
Okay, right.
Okay, here it comes. Managing market data consumption and keeping costs in check is a big focus for us. What advice do you have on how we can make sure our market data management is as efficient as possible?
I guess in some respects, and this isn't meant to sound blasé, but make sure efficiency comes from, are you taking things once? And are you, rather than you've got different business lines within your organization who all need data and they go out and independently say, I need data and source it from a vendor, and I need data and source it from a vendor, and you find out that you've sourced the same piece of data 4 or 5 times. So I think ensuring that efficiency and dealing with an organization that will ultimately be able to provide you as a client with that transparency and usage type data. That's not to say that we'll move fully to usage-based models. I'm not sure the market is ready for full usage-based models. I can't see our clients standing up each October to their board and saying, we're not quite sure what our market data budget needs to be for next year yet, because we're not sure how much we're going to use. It depends on market volatility. It depends on whether bill in emerging markets really drives into those. I don't think that's going to be possible. I think clients will still want certainty around budgeting and costs of market data, but they would still like to see what their usage patterns are. So I think transparency into that usage, that's something we're putting a lot of time and effort into, so that our clients understand exactly what they're consuming. But equally, how can we work with our clients to drive those efficiencies? And principally, that means drive out duplication.
Okay, thank you very much indeed, John. And I think we're out of time now. So thank you for that. Great way to end our event today, to ask big questions and look at big potential. So thank you very much indeed for that.
No, thanks for having me, Sarah.
Thanks, great to see you. So now we've come to the end of our RegTech Summit Asia Pac 2021 virtual today. Thank you to all our speakers for taking part and the moderators for playing their part in the event. It's been really very interesting and a great focus on APAC. I'd like to thank our speakers and also our sponsors, our platinum sponsors, Solidatus and Refinitiv, our gold sponsors, the Derivatives Service Bureau, IHS Markit, Know Your Customer, SIX, Relativity, and Smash. If you please complete the delegate feedback form, your feedback is important to the future development of our events, and we're very keen to follow along the lines of where you'd like us to go. If you've missed any sessions from yesterday or today, they're available on demand for a limited time. Thanks again for joining us, and we hope to see you at a future A-Team Group event. Our RegTech APAC event in 2022 will, we hope, be live and take place in person in Singapore. We'll be in touch with more information on this soon, and don't forget to sign up for our upcoming APAC focused webinars and events on the A-Team Insight events page. It's been a great event, so thank you very much indeed, everybody, for joining us. Thank you.